Really big way. Does that give it a little bit of a boost to the French index and to the stock 600 broadly? But I think the thing to keep in mind is these are three positive individual corporate stories, Guy, that you are seeing from three different parts of Europe.
It's going to be interesting to see how that all folds into the market narrative that is so top-down, so Trump-driven at the moment. Let's find out. European equity markets are about to open. Keeping a careful eye on the single stocks this morning, but let's show you some big-picture numbers and get you going with this Wednesday trade. FTSE 100, straight out of the gate and doing very little. We're not anticipating much movement from any of these European markets today that don't have the single stock narrative attached to them. So the FTSE feels like it could be one of those stocks this morning. We're going to watch what happens, though, more carefully elsewhere. The stock 600 up by 0.2%. We're waiting for Germany. We're waiting for France. Germany, I would argue, probably the big story that we're going to be seeing single stock stories emerging from today. Adidas, we're going to watch that carefully. BMW, the car sector more broadly. Is there an AI story read across? We've seen that represented very well out in Asia as well. Are we folding in a Trump tariffs narrative this morning? Feels a little less of that narrative maybe in the market this morning. So the IBEX absolutely flat. The CAC up a little bit. The FTSE 100 absolutely flat. The stock 600 maybe incorporating a few German stocks up by 0.3%. Critty, what else are we seeing below the surface? What does the sector story look like? What are these single stocks doing this morning?
Well, right out of the gates, as we, of course, are waiting for some of those volume hitting the German indexes, is the healthcare story. When you're looking at the index contributions here, right off the bat, I'm looking at Novo Nordisk, I'm looking at Roche, I'm looking at Novartis. Those seem to be some of your biggest movers to the upside, sprinkled with a little bit of that tech story as well. I wonder how much of that is that AI conversation we were having in terms of the AI infrastructure investment going into the States as well there. So Schneider, SEP, ASML, again, mixed with some of the biotech space is crucial as well. I'm getting some headlines here that Roche got FDA clearance for one of their Cobas-Liat molecular tests, so perhaps that helping as well. But really, that heavy volume, Guy, concentrated on the upside, at least, in tech and in biotech.
So, yeah. In terms of the German market, we're waiting for details to come through. We're just getting some single stock names coming through. So Munich Re's up by 1.5. SAP, to your point about what is happening with the tech story, the big tech driver of the German market is up by over 1%. I'm waiting to see some clearer sense of direction coming out of the other sectors. The car sector in particular, we're watching very carefully. We've got a few names through. I've yet to see a trade on Adidas. It's yet to trade on the German market this morning. There's a bunch of German stocks that still are yet to open. We'll see what happens there. But interestingly, we were talking about what's happening with the car sector. Actually, some weakness emerging there. You got Porsche down, you got Mercedes, Volkswagen, Conti, all trading lower this morning. It's also interesting that Infineon not doing a great deal this morning, despite actually maybe some tech focus coming through. So we're waiting for Adidas to trade. It's one of the two single stocks that we're still waiting for numbers to come through on. When that comes through, I suspect we'll get a pop to the upside.
And on those car makers, we are getting some analyst moves as well. BMW getting that upgrade. Mercedes and Porsche getting downgraded over at Berenberg, so perhaps that creating some movement in the markets as well. As we, of course, are waiting for that German index, it's worth mentioning that you are seeing some of the commodity names take a little bit of a back foot here. This is another second trading session that you've seen that happen in the UK. Glencore, Rio, Shell as well, and BP, all some of your biggest index weights as we get closer and closer to maybe deciding a little bit of that. Again, we are still waiting for some of the opens on how the German index is performing, but as we get that, we will bring that live to you. Let's go a little bit macro here, though, because as Guy said, maybe it is a little bit of a top-down approach. Really what happens out of Washington, D.C., maybe driving the markets globally. President Trump, of course, saying his threat to hit China with 10% tariffs on all imports is still on the table, and it could come as soon as next month. Joining us for more on that, let's bring in Bloomberg's Valerie Teitel. Valerie, do we care about this, or is this priced in?
Well, the one interesting thing that he did say with these China tariffs is he mentioned this date again of February 1st, meaning we maybe are 2 weeks away from a big announcement from the Trump administration on tariffs. The other interesting thing, Critty, is he has not mentioned tariffs when it comes to Europe. He mentioned Canada and Mexico yesterday. He mentioned China overnight, but it seems like his focus really not on Europe at the moment. And perhaps, hey, that's a sigh of relief for the euro and maybe for those at Davos.
He made some comments. So he talks about Europe not treating the US very well. He made those comments yesterday. As you say, though, not delivering the kind of detail that we're seeing. So we've yet to see a number attached or a date. But as you say, this 1st of February date, is it risk on until then, therefore?
I mean,
do you focus on the growth narrative?
Yeah, well, at least that's what the market overnight has taken to it, seeing equity futures in the green. But before we get to February 1st, you know, we have next week, we have the Fed meeting. We also have the ECB meeting. So maybe a bit shifting from the politics back to any guidance that we get from the central bank. You know, just what do Fed policy members make of the Trump administration? I'm sure Powell will be asked a lot on that. But back to your growth agenda, I think it's very interesting to note that what's going on in Davos, the things we're hearing from CEOs, they're not being combative to Trump. If anything, they are touting, hey, let's look at the U.S.'s example and think about how we can apply it to Europe. And that is a very big shift when it comes to, you know, the trajectory for regulation in Europe. If we perhaps see, you know, different tariffs being put on the car industry, for example, if they do think about how we can help the car industry here at home versus those other things that Europe has done that has frankly hurt its own car industry instead of standing up for it.
Yeah, well, speaking of that car industry, the DAX is now officially open here and outperforming the rest of the indexes on the European continent. The underperformers, though, are, as you mentioned, those car makers. So Porsche, Mercedes, Volkswagen, all taking a little bit of a beating this morning and kind of counterbalancing that massive move in Adidas that we were expecting, higher by 5.4% at the moment.
Is this concern around tariffs? Is this concern around, is this just an upgrade-downgrade story this morning that's hitting that sector? Is it something that we've been waiting for? We've seen some big movements in this sector over the last few days. It's hard in some ways to pin down exactly what is going on here. There was an opening salvo, a very gentle opening salvo, to Val's point yesterday about Europe. Where do we go with that? We don't know. But that was the first time I've heard Europe mentioned. He didn't really talk about it during the inauguration a great deal. Yeah. So is that maybe, can we fold that, can we apply that to what we're seeing maybe with some of the European sectors this morning?
But also, is the European playbook in terms of trading that the same as the way it's trading Mexico, Canada, China headlines? I mean, you did a great job. Every time we get those headlines, you see a sell-off in Chinese assets, you get a sell-off in the peso, you get a sell-off even in the Canadian dollar. You don't necessarily get a sell-off in the euro when he mentions the EU.
Yeah, look, I mean, there has been a lot of thoughts about euro parity, euro on the downside, this kind of dismal thought on Europe. But if we do see an about shift from some regulators, some CEOs calling for, hey, Europe, we need to do what the U.S. is doing and protect our competitiveness when it comes to our key industries. I mean, that would be a sentiment change, I think, for those out there wanting to be, bearish on the euro, being, short.
It's much easier to do, though, if you've got a president that can pull the levers, whereas here in Europe, there are multiple countries, multiple jurisdictions, multiple incentives.
The course seems to be growing, which is positive for the risk framework for European assets.
Okay. We'll see whether that has got legs. Valerie Teitel, thank you very much indeed. Let's take a look at the core six this morning, figure out exactly what is going on at the centre of gravity of Europe. This is the picture, as you can see. Tech does seem to be getting a little bit of a boost this morning. Schneider's up, ASML's trading a little higher as well. Some weakness maybe in the luxury space, but not much. Novo's having a much better day. Let's talk about some individual names, figure out what's going on there. Joe has the details.
So we are seeing a gain in Adidas shares today. I'm going to go with Adidas rather than Adidas, despite what Critty will say. But Adidas gaining around 6% at the moment, and also seeing a bit of a gain in Puma as well, rising around 2% at the open. Now, remember, Adidas did report a jump in their sales and also their margins looking pretty strong, recovering from the drop in that relationship with Kanye West that we've covered before in the show. And seeing a bit of a feed through as well. Puma gaining, Frasers as well. JD Sports not seeing too much reaction. Definitely a sector in focus today. Then in terms of EasyJet, that one was looking higher in the indications, but actually now lower, down around 4% at the moment. Now, the bookings look pretty strong. They have maintained their outlook, but potentially seeing some cost growth coming through in that one, and therefore not actually gaining today, falling in terms of EasyJet, down as much as 4%. Bit of a surprise on that one. Then in terms of Trainline, this one just coming into our radar. We had an update from the Department of Transport in the UK last night saying that they are pushing ahead with their plans to consolidate the booking platforms on trains in the UK for the rail companies, and therefore that is a competitive threat for Trainline. We're seeing that stock dropping around 4% at the open for the UK listed company. Then over in Amsterdam, we've got Universal Music, an exclusive from Bloomberg, saying that an unidentified shareholder is looking to offload some stock, around 200 million quid's worth of stock in the company responsible for Taylor Swift's music. Of course, that one coming down a little bit at the moment this morning in terms of the Amsterdam stock. Then on the ratings changes, we had ST Micro, a very rare downgrade. This one coming through from Barclays today. They're saying they're seeing a split in the semiconductor companies due to the demand coming from China, and ST Micro is not one of the ones seeing the strong boost from China at the moment. So therefore, that stock declining today as Barclays cuts to underweight. Only the second bank with an underweight on that stock. And finally, BMW, as we've mentioned, that one is gaining today. This one getting an update at Berenberg. They've changed the ratings, as you guys have been discussing, on a number of stocks. They've downgraded Mercedes, I believe, but they like BMW due to its latest launches in terms of its new models. That one getting 1%, 1.1% for BMW in Germany today.
Joe Easton there from our equities team walking us through some of those early movers. We should mention, if there's one sector that's on the back foot today in terms of stock market performance, it is the banking sector. We're going to continue the conversation on that banking sector and return to Davos, where our own Francine Lacqua is standing by. Fran.
Grady, thanks so much. We're joined by Bill Winters, the Chief Executive Officer of Standard Chartered. Bill, as always, you're a Davos regular. Thank you so much for joining us. There's a lot going on. I'm sure you get stopped in the corridor saying, what will Trump do? What does it mean for the economy? What do you answer?
Well, what we know so far is that the animal spirits have been unleashed. Right? So people are looking at ways that they can invest around the themes that they think the U.S. is migrating towards. No surprise in his early actions so far, but the big questions on the economy are where are we going to come out on tariffs, and where are we going to come out in terms of the engagement between the U.S. and China, and what's that mean for the rest of the world? And those questions are still looming.
How do you see U.S.-China playing out actually for the banks, especially as we're expecting this wave of deregulation in the U.S.?
Look, I live in hope, and the hope in which I live is that there can be an entente. I don't think we're going to see some sort of a big rapprochement between the U.S. and China, but I think there can be an understanding about how we can cooperate together to get some really important things done in the world. There's some really obvious ones like climate change, which is unlikely to be the natural point of engagement between the Trump administration and China. But the system for global trade is a second. And we all know the world in aggregate is better off if we have free and fair trade. But we also know that people have been left behind, and Trump's been very, very straightforward in his determination to change the rules. We'll see.
But when you hear Donald Trump actually say tariffs is his favorite word in the English dictionary, do you believe him at face value, or is everything a negotiating tactic and a starting point?
Well, I think ultimately everything is a negotiating tactic kind of for everyone when you're trying to change the status quo. And now, how deep is his conviction, and how much does he really believe things need to change, and how much can things change? Right? There's a limit to how much flex either side has in a negotiation. It really is an open question. I think the market is as unclear on that question as it's ever been.
Okay, how does it change how you want to run the bank?
So we run the bank for our clients, right, as a practical matter. And our clients have been diversifying their supply chains for the past 8 years. So obviously there was the first round of Trump, although the tensions between China and the U.S. have been going on from before then, and we know they carried on with Biden very, very strongly. So we've diversified supply chains. COVID actually threw a different spanner in the works in terms of security of supply. But we've also got many countries around the world who have developed outstanding manufacturing bases of their own. You think about a place like Vietnam or increasingly India. So that's been ongoing, and our job is to help them get from where they are to where they're going in a seamless and effective way. And I'd say so far that's going well. So
do you want to increase your presence in the U.S., be there for your clients?
No, we've got a good presence in the U.S. We've got a very good presence with our corporate clients and financial institutions in the U.S. U.S., most of whom are operating back in Asia, Middle East, and Africa, which are our home markets. But it's a big market in the U.S. and lots of opportunity for us to engage on terms that make sense for us and for them.
Your share price, it's going in the right direction, the direction you want it.
Yes.
Is this a landmark point?
I don't know. I think we've got a lot further to go. I mean, our share price has gone up because we're making more money, and our earnings are improving. And our earnings are improving because we've got some really good strategic positioning. Everything is cross-border, especially if there's an Asia, Middle East, Africa anchor, and then serving the affluent and the aspiring affluent. And this is kind of what's a little bit different about our private banking and affluent banking effort is that if you go into India or even into Korea or Indonesia, we've got people who say, like, I'm not really rich yet, but I want to be rich, and I want to find a way to manage my money so that I can grow and become wealthy and retire comfortably and leave something to my children. And those are the people that are attracted to Standard Chartered. And we're on top of that one. It's going well.
So how much do you think your share price can rise by?
Yeah, I wish I could answer that question. We're trading below book value. We're still trading below book value, which doesn't make any sense to me given the returns that we're generating. But hey,
Okay, so what's the winter's target? You must have a target. You reached where you wanted it to be so far. What's next?
We have a 30% return on tangible. Approaching 30% is the actual guidance that we give in 2026. We'll announce our full-year earnings in a few weeks. And you've seen the U.S. banks have reported they've been very strong. We're participating in the same markets. So I feel very good about our prospects, and I see that playing out for some time. And I think if we make more money and if we do a good job for our shareholders, our share price will go up.
Okay. Do you have new targets that you'll announce?
We will announce new targets when we announce new targets. But no, as you know, Francine, no doubt I'll be in your studio in London.
Okay. It's a deal.
Talking about that in February.
Okay, talk to me a bit about your Fit for Growth strategy, right?
Yeah.
Again, are you there? Are you going to do more? Like, is this mission accomplished for Bill Winters,
No.
or are you like
never,
75% there?
No, it's never mission accomplished. No, so Fit for Growth is. So I've been in Standard Chartered for 10 years now. For the first 7 years, our expenses were basically $10 billion, flat. We had a pickup around inflation, and because performance was improving, we told the market we're going to cap our expenses in 2026 at $12 billion, right? And that's going to require us to do some ongoing productivity, which we do every year in any case. Fit for Growth is a great opportunity to be a little bit more strategic about it and really change the way we do business. So far, so good.
Okay, what's one thing that you worry about in this year, actually in the next 12 months?
I worry about all sorts of things. I worry about the U.S. economy overheating and getting an inflationary thrust, which drags everything back. We all know that a higher U.S. interest rates and a strong U.S. economy mean also a stronger dollar, which is tough for emerging markets. So we were seeing the beginnings of meaningful capital inflow back into emerging markets. That's pulled back now. So I do worry about that U.S. economy overheating. Of course, the geopolitical tensions are always with us. But I think for the moment, it's maybe because we're in Davos, we can be hopeful that there's the prospect of peace in the Middle East, right? We can imagine the prospect for peace in Europe, but that would require an entente between the U.S. and China that could also happen. So while we're fantasizing, let's. Yeah.
But it just feels like it could be a very volatile year on all fronts,
I think it's likely to be a very volatile year. I think that the economy is going through a transition. The U.S. is clearly at full employment, but still with a very large budget deficit. So we'll see volatility in interest rates. We'll see volatility therefore in foreign exchange rates.
Yeah. Is that good for banks? Is that good for Standard Chartered?
It's very good for us. And it's good for us up until the point where it really hurts our clients. Once the clients are feeling pain, of course, then we feel some pain as well. And the volatility so far has been okay. I think a secular increase in U.S. interest rates or a failure to decrease would begin to really hurt clients in the U.S. and in the rest of the world.
A lot of banks are thinking about succession. How do you think about that?
I think about it all the time, and thankfully I've got a really good group of direct reports. Running our corporate bank, running our retail bank. We have a CFO that joined us a year ago, and any of those people could run Standard Chartered. So if I fall off that edge tomorrow, the Standard Chartered will be fine. We also go through the ordinary course of chairman succession, and our chairman he joined just after me, so he will hit his 9-year point over the course of this year. thankfully, we've got a deep bench on the board. We've got a deep bench in management. So, but it's the job of the chairman and the CEO to make sure that succession is provided for. I think we've done a pretty good job.
Okay, Bill, thanks so much. And you're not falling anywhere. We'll make sure you get safely off the chair as well. Bill Winters, of course, the Chief Executive of Standard Chartered. With that, I'm going to send it back to you in London, and then we'll have plenty more throughout the day. Critty.
Bloomberg's Francie Lockwood there in Davos with none other than Bill Winters, the Standard Chartered CEO. We thank you so much. Let's go from the banking sector to the technology to the media sector. Coming up, Netflix posting a record quarter thanks to live sports coverage and the return of Squid Game. We're going to dive into the details next. This is Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal?
Are markets too optimistic?
How do you worry about the things that are outside your control?
How does the current fighting completely stop?
I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asia markets.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
U.S. tech is influencing global markets.
Technology is driving business across Europe.
Companies in Asia are betting on tech.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up-to-the-minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve, and this is Bloomberg.
We are constantly trying to broaden our programming, and live events is one of those things, and sports is part of that those live events. So when I look at this and say that's a really fantastic thing, but but it doesn't really change the underlying economics of full season big league sports being extremely challenging. So if there was a path where we could actually make the economics work for both us and the league, we certainly would explore.
The Netflix co-CEO Ted Sarandos speaking there about the future of Netflix and certainly broadening out that programming. Netflix shares in the meantime have soared in after-hours trading after its biggest quarterly subscriber gain in history. Now, the return of Squid Game and its first major live sporting events saw the streaming giant add almost 19 million customers in the fourth quarter. Let's dive into the details here. Joining us for more is Bloomberg's entertainment reporter Sohee Kim out of Seoul. Sohee, walk us through these earnings.
Right. Good morning. Netflix reported solid earnings with a record 18.9 million new subscribers and 15% revenue growth. The market shared the results, sending the stock up more than 10% in after-hours trading. Netflix said its live streaming programming, such as Tyson Paul boxing match and Christmas Day NFL games, helped boost its subscriber number. And the return of Squid Game also played as a key growth driver in the fourth quarter. So as it has proved that both live streaming and big franchise series can turbocharge its business growth, Netflix is going to raise subscription prices for premium and ad tier in North America and some other markets. With that, Netflix is confident that it would post better earnings in coming months. So its biggest titles, Squid Game, Wednesday, and Stranger Things, are all returning this year.
So this is the last time we're going to get subscriber numbers. How are we going to judge Netflix's performance going forward from here? Are there useful comparisons we can make? How useful are the other metrics in judging what this company is doing?
The paid subscriber number has been the key metrics to measure the growth of Netflix for sure. Since it now has more than 300 million subscribers, which is the largest among video streaming platforms, it's pretty uncertain how much headroom left for the overall subscriber growth. So Netflix is shifting its strategy as it's focusing more on ad tier and pricing policies that would expand its sales and improve profitability for coming years. And it's also diversifying revenue sources such as gaming that might help boost viewers' stickiness.
Walk us through this kind of aim, though, to broaden that kind of programming. You mentioned the live sports there. Walk us through how the economics of that work, because on the surface, it sounds pretty cost-intensive.
Right. So Netflix is like a global cable TV service. Now it has a scale and a wide audience pool from US and Europe to Asia and Latin America. And any big franchise series and live sports events, like the one with Beyonce halftime show, could instantly draw global viewerships and create social buzz around those moments. So that means Netflix now has negotiating power over increasing the ad sales for prime time, which might help recouping costs for the events and clinching more sports deals over the next few years. So regarding the programming, it has been cultivating production ecosystem in a couple of different markets like India, South Korea for sure, and Paris, Mexico, where they could attract more local subscribers and offer various programming to global viewers.
I think the big takeaway, live TV is good. So Kim, thank you very much indeed. Let's talk about what is happening right here, right now. We're getting some headlines coming through. Christine Lagarde, president of the ECB meeting coming up, of course. Direction for rates is clear. Pace depends on the data. The ECB is not behind the curve when it comes to rate cuts in Europe.
Also adding the gradual steps are reasonable at the moment, reiterating that the U.S. is not in the driver's seat. Coming up, we're going to talk about that impact on more of the banking sector. Francine's already had several. Now we've got Haslinda Amin joining us from the World Economic Forum in Davos for an exclusive conversation with the president and group CEO of Mizuho Financial. We were just talking about the Fed, the ECB. I'm sure he'll have plenty to say on the BOJ as well. Just a couple days away out from what's expected to be a very hawkish meeting. Stick with us. This is Bloomberg.
One of the very critical things is that a lot of young entrepreneurs don't realize is that when you start as an entrepreneur, you're not just building your business, which of course you are, but you're also building your organization. And most people don't realize that. And building an organization is not just about hiring people. It's about the culture, it's about the systems, the values, the mission. You know, it's about how you operate, how you do things, how you retain people, how you keep them motivated. So it's all of those things put together. And over time, you realize that, a lot of effort has to go into it. And then eventually you have an organization that has a life of its own. And it's sometimes you look at it and you marvel and you think about, how was this created? And was I the person that was behind getting this thing done?
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and the ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Welcome back to the Open Trade. We are now 30 minutes into today's equity market session here in Europe. The Stock 600 has just surpassed its previous record closing high. Equities are bid. The DAX is outperforming.
In a very, very big way. We'll see if those gains hold throughout the rest of the session. In the meantime, we're also getting headlines coming out of Japan here. Kyoto reporting that the Japanese Prime Minister will be presenting an investment plan to Donald Trump at the summit. It looks like Prime Minister Ishiba is considering visiting the States as early as February. This, of course, follows conversation from the new Secretary of State, Marco Rubio, with the Japanese Foreign Minister to really get those investment proceedings moving forward. The context, of course, is the Nippon Steel deal being blocked in terms of the acquisition of U.S. Steel. We'll see how the Trump administration handles all that. Let's continue the conversation about Japan and return to Davos, where Bloomberg's Haslinda Amin is joined by one of the biggest banks out of Japan. Haslinda.
Well, that's right. CEOs here in Davos assessing the Trump impact. Joining me now, Mizuho Financial Group CEO and President Masahiro Kihara. Masahiro-san, good to have you with us. It is, by the way, a very rare interview. Yes. We talk about the impact of Trump. How do you think Trump would impact the banking industry in general?
Well, I think President Trump is very, very friendly to the business, and I think that will be generally, that would be a plus to the banking industry. For us, we have a sizable operation in the U.S. We have been adding capabilities in the investment banking area, so this will be a good opportunity for us too. Yeah.
What opportunities do you see? We know that you'd like to expand your M&As, for instance.
Sure.
What are the plans?
So 2 years ago, we purchased a M&A boutique firm called Greenhill. And that has added a lot of transaction to our platform in the U.S., but also cross-border. So I think moving on, we should fully integrate this Greenhill platform into our Mizuho platform, and then we can collaborate. Those platforms can collaborate, and that will increase our transactions.
So that Greenhill acquisition is going smoothly.
Very well.
What can be expected in the next 12, 24 months?
Well, I would say that increased transactions, it means that the M&A transactions will increase. Also,
can you put a figure to it? Can you put a number?
Well, that's a little bit difficult for me at this moment, but but also our revenue, let's say 25% comes from the U.S. actually. I guess we're probably aiming to sort of move that into 30% or so. That can be done, I think.
We know that Japanese companies are going overseas for acquisitions because of the shrinking population at home. But when it comes to the U.S., you got to wonder how Trump actually sees these acquisitions, how he feels about Japanese companies buying American companies. How are you assessing that?
Well, I guess it is important to understand the history of those industries that you have in U.S. Be sure that you make sure to the people that the Japanese industry will be able to help, and also if we do M&As, we will be U.S. companies in that sense when we do M&As in that area. So I think that's the most important part.
We know that you're projecting a record profit for the current fiscal year that ends in March.
Yes.
Can you build on that momentum? Can we see yet another record year in the coming fiscal year?
So I think there are 3 areas that is rewarding, actually. One is Japanese corporates. And we can talk about this more later, but the momentum in Japan is changing dramatically, I think. And the CEOs are willing to invest. And we see a lot of our corporate actions coming in, not only in the blue chip, but also in the mid-cap sectors. So that is a bright area. Another is asset management and wealth management. The attitude toward investment is changing dramatically in the individuals. So that is another bright spot. And the other one is our global corporate and investment banking platform that we have. And if the regions can collaborate, that will definitely expand our revenue.
So a lot of sources for revenue. Can you put a number to how much growth you might see in profit?
So this year, we will be aiming for after-tax profit, 820 billion yen. I think in 3 or 4 years, we should aim 1 trillion yen after-tax profit. Yeah.
Okay, we have to talk about the BOJ.
Sure.
Expectations are high that the BOJ will hike on Friday. Is that 100%?
Well, there's no 100% in this world, but
99%.
But I would say there is a high chance, 90% probably. BOJ was looking what this new President Trump's how it will come out. I think there was no, out of expectations. BOJ has confirmed that probably there will be 3 years of consecutive wage increase. So I think there is a environment set for them to raise rates. Yes.
Okay, so if it does raise rates on Friday, when could be the next move? It wouldn't be one and done.
Right. So July, making sure that the next wage increase will turn into increasing consumption in Japan. So July, and then maybe next January or February.
What might the movements be in the market? The last time the BOJ raised rates, we saw stocks slump 14%.
Right.
And we saw the unwinding of the yen carry trade.
Yes. Well, I guess it's the issue of conversation, dialogue with the market. And I think this time they are doing a good dialogue with the market, I think. So I don't think there will be a surprise in the market this time. Fundamentally, if you think why they are raising rates, it is because the fundamentals are good. There's wage increase, there's an increase in consumptions. So, there shouldn't be a surprise. That's what I think.
Do you think the BOJ might consider what the next move would be for the Fed and what the Fed might be doing in 2025?
Well, that would only be when BOJ will not, the Fed will not be able to, move down the interest rate because of because inflation is sticky. Maybe that might be a concern for them because that means that the U.S. economy might go down. So, but as far as they don't see it, I don't think they will care about Fed's movement. Not that much.
The markets seem to prize perfection. What's the risk are you associating with that? Because we're seeing a herd mentality. People are so optimistic that the rally would continue, that the Fed's going to cut rates this year.
Right. Well, I guess currently the sentiment is very well. You always have to be careful about overreaction, overheating of the economy. And given the fact that we have operations all over the globe, we really have to be careful on that part.
And the biggest risk for you right now? Sticky inflation in the U.S. perhaps?
Yes, if that will be the case, I think rates higher for longer, that will definitely be one aspect that we really have to be careful. Yeah.
I'd like to ask you about the growth outlook for your business. Which are the biggest growth drivers you see?
So, number one is, it's a combination. We have, I think, just as I said, it's 3 areas. Japanese corporates, wholesale banking in Japan, asset management, wealth management in Japan, and the global CIB business that I just talked about. And I think those are the areas that we concentrate our business, and those are the areas that we get organic growth.
Just one final question before I let you go. The projection for the yen, some say 140, 145, and how would that impact your business?
Yeah, so I would say somewhere around 145 is the area that should go. As I said, 40% of our revenue comes from abroad, which means that when you calculate the profits into yen, it will decrease a little bit. But 10 yen, that's not big.
Okay, confidence there.
Yeah.
Masahiro-san, thank you so much for your time.
Thank you so much.
Mizuho Financial Group CEO and President Masahiro Kihara. Handing it back to you, Guy.
Yes, Linda, thank you very much indeed. Fascinating conversation. We're looking forward to hearing what the BOJ has to say in a few days' time. Coming up, we are going to be back in Davos. Francine will be joined by the Spanish Prime Minister, Pedro Sanchez. Stay with us for that conversation. It's coming up very shortly. This is Bloomberg.
What about quantum computing? People talk about that. Is that something that I should be looking at investing in?
I've made a lot of mistakes, betting on these new technologies like AR, VR turns out to be not so big, 3D printing turns out to be not so big. My estimate is $100 trillion was invested in today's dollar in the PC, CPU-based infrastructure. All this is going to get ripped out to put $100 trillion or more in our GPU-based infrastructure. In that sort of quantum of numbers, I feel that the quantum computing is going to be very small.
You always are worried about, I presume, geopolitical events. So are there some geopolitical events you're worried about right now?
Yes. I don't know why, but for some reason, I love thinking about black swans. And at the office, everybody thinks I'm weird because I'm always thinking about what can go wrong. But underpinning the AI is the chips. And the chips, despite the CHIP Act, which I think was a good idea for the US, I still think like 80% or so of the capex of TSM is in Taiwan. And so at the leading edge, a lot of capacity is in one very small area. Forget that it's just in China, it's in a very small area. I think that's very risky.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
all the data that I read over the last couple of weeks, I think were not a surprise to me. So it gave me the indication and also the certainty that we can achieve our target back to price stability. And we shouldn't forget where we came from. We came from more than 10% inflation rates for the Eurozone, and now we are close to our target.
Close to target. Bundesbank President and ECB Governing Council member Joachim Nagel speaking a little earlier at the World Economic Forum in Davos. Let's get back there now. Francine Lacroix is joined by the Spanish Prime Minister.
Yeah, thank you so much. I am indeed delighted to be joined by Head of State, Mr. Pedro Sanchez of Spain. Thank you, Prime Minister, for joining us. There's a lot of confusion on how Europe should and will handle Donald Trump. Do you feel that it's every man for himself?
Well, I think that we have to engage in a constructive approach in our relationship with the new administration. I do believe that Europe and the United States, we share a strong transatlantic bond rooted in common values, history, culture, and of course common interests. So, you know, at the end of the day, a trade war is not in the interest of the US and of course in the interest of the European Union. So let's focus on how do we strengthen this transatlantic relationship and avoid any kind of misunderstanding.
Is there a risk, Prime Minister, that actually European unity falls apart because he rattles the cage too much?
Well, I think that over the past 4 or 5 years, we have witnessed the strongest European Union, the strongest common response to common challenges, such as the COVID pandemic or the war in Ukraine. So, indeed, I do believe that one of the lessons that we take from the European Union is that we have to be stronger ownership in different sectors, such as digital, technology or defense. And also we have to understand that Europe has its own way of responding to these challenges on climate, technology, how do we regulate AI, and so on and so forth. So, you know, I don't think it's a contradiction to have a constructive approach towards the U.S. administration, but of course, taking into account that we have our own way of responding to these common challenges.
Which ways, like retaliation?
No, I think that, for instance, we have witnessed over the past days that the European Union reached a very important trade agreement with Mexico, before with Mercosur, some years ago with Canada, also with Chile. So, you know, we do believe that we need more trade, not less. We want to open ourselves to and reach trade agreements and new relationships with different regional blocs and different countries. The world is very big, and I think that Europe has its own assets to be strongest and of course to have more influence in the geopolitical debate.
Prime Minister, Spain has also welcomed a number of Chinese investments.
Yes.
Does that put you in the spearhead actually of Donald Trump? Does that worry you?
This is what I was trying to explain. We need to diversify our economic relationship. And we're looking forward to have this constructive approach with the U.S. administration. But of course, we need also to take into consideration the importance of China. In this regard, of course, you know, the surplus on trade that China has regarding the European Union is hard to maintain. Yeah. We defend a more balanced trade relationship between the European Union and China. And this is what we are, you know, focusing ourselves as a Spanish administration.
But Prime Minister, so would you say you're the destination par excellence of Chinese investments in Europe? Is that how you would define yourself, that you're open for business for Chinese?
We're open for business for many countries. Of course, China, because we want to have the best relationship with a very important country and a very important economy globally. But of course, we also understand that this imbalance is different. I mean, it's very hard to maintain, and this is something that we need to rebalance and to reconsider it, and this is what we are defending within the European Union, to have a common approach as Europe regarding China.
But Prime Minister, even if this angers Donald Trump, you will stay the course.
I mean, we see opportunities worldwide. We see opportunities also in China. We see opportunities in India. I was also traveling to India last year. We see opportunities in, as I said before, in Latin America, in Africa, in the U.S. We have strong investments in the U.S. too, as you know, Spanish companies on renewables, infrastructures, and so on and so forth. So, you know, as I said before, we need more trade, not less trade. And that means that we need to strengthen our multilateral institutions, such as the World Trade Organization, or what the European Union is doing with Mercosur, with Chile, with Mexico, with Canada, and other countries.
Prime Minister, focusing on domestic issues, so can you clarify your position on housing tax for foreigners? You've said that you would tax 100%.
Yes.
And then there was, you know, some question marks on whether it would be an outright ban.
No, it's taxing. And this is because, you know, Spain is facing a critical housing situation.
Yeah.
A very critical housing situation. To give you some figures, you know, prices have gotten up 48%. 48% in the last decade. So what we need to do is to preserve and to consolidate the residential use of housing, and that is why we took some measures, some decisions, and one of it is the one that you mentioned. Because at the end of the day, what we need is more affordable housing and fewer Airbnbs.
But, Prime Minister, is there a danger that actually this is seen as anti-investment? So I think we understand there's about like 20,000 houses that are mainly on beachfront.
2023, we had 27,000 houses of people, European non-resident in Spain, non-European resident in Spain that were investing in these real estate properties, but without living in Spain. And as I said before, what is important is to keep in mind that we are facing a very critical housing situation in Spain, and for that we need to, you know, to use all the means, all the tools that at the end of the day the state has in order to reduce and to preserve the residential use of housing.
But so this won't scare away investors?
I won't say that, because at the end of the day, what you see the figures is that foreign investments are coming to Spain. They're confident with the economic growth of Spain in the past years, but also in the coming years. So I think that there's a combination of different aspects. First, strong economic growth with CO2 reduction emissions. Second, strong employment generations with salary increases. And of course, a strong investment in public services with sound fiscal policy. So I do believe that Spain, you know, we're very confident with the incoming years in terms of economic growth and employment generation.
Prime Minister, can you give some kind of confidence to the markets or investors that this is the only measure you'll take that could be seen as anti-foreign investment?
Well, at the end of the day, what we are seeing in Spain is, you know, to give you an example, in the last 5 years, between 2018 and 2024, Spain was the 5th largest recipient of greenfield projects. And this is because we have a consistent energy policy as well as others policies. Because what we have witnessed over the past 6 years in Spain is a strong structural reforms in labor market, in pension system, in our educational system, and of course with sound fiscal policies that allow us to end 2024 with a public deficit of 3% of our GDP and with a reduction of 20 points of our public debt.
Envy that. Prime Minister, let me ask you about banks. Are you still against the BBVA Sabadell deal?
Well, this is not a question to be asked to Prime Minister of the government, because it's under review of our competition authorities.
But is it something that you would welcome in terms of domestic, or would you rather a foreign bank coming in? We're trying to understand the
no, what we want is, you know, we have to take into consideration different aspects of Of course, as you know quite well in Spain, we have a large number of SMEs, 90%. And in this regard, social cohesion, territorial cohesion, SMEs. So we have a strong financial system in Spain, and let's wait until our competition authorities state in this operation.
Prime Minister, what does your gut feeling say? What would you rather for your citizens? Like a domestic consolidation, or even a European bank coming in and saying, actually, this looks like a good bank, let me buy it?
Well, what I want is a strong financial system in Spain, and let's wait and see what our competition authorities state in this regard.
Prime Minister, what's the latest with Telefonica? The chairman left, what's next?
What is next is that we have a new shareholder base. This was a corporate, let's say, a decision taken by these new shareholders in Telefonica, and we're very confident. Telefonica, as you know quite well, is very important for us in terms of telecom industry, digital economy, and of course security and defense. So we're very excited and confident with the new team, and of course we're also very grateful with the former CEO of Telefonica, José María Payete.
Would you like it to be part of your semiconductor strategy? I know this is something that's extremely important to the government and strategically probably makes sense. Will Telefonica be part of that?
Well, Telefonica has a major role to play in different aspects of our economy. So let's wait and see the new team, but we're really confident, and of course regarding semiconductor industry and digital economy, of course I think that Telefonica can play a very important role.
So you would encourage them?
Well, I won't say that because I'm the Prime Minister. This is a corporation decision, but I think that we have a lot of assets, and we are living a great momentum, economic momentum in Spain, with good expectations in the coming years. So we are here to take advantage of these good expectations.
Prime Minister, as always, wonderful to interview. Thank you so much for making time in Davos. I know you have a very busy schedule here. That was the Spanish Prime Minister, Pedro Sánchez. We'll have plenty more throughout the day here from Davos.
Bloomberg's Francine Lacqua, of course, there with the Spanish Prime Minister. We thank you so much for bringing that to us. Several great interviews coming up out of Switzerland. The governor of the Bank of Spain, Jose Luis Escriva, will be joining the program as well. Vladimir Zelensky, the president of Ukraine. We've got the president of Argentina as well, with Javier Milei. And, of course, the president of Finland, Alexander Stubb, as well. An all-star lineup covering geopolitics, interest rates. I'm sure defense will be on the agenda as well.
Absolutely. So what did we learn this morning? The UK budget deficit, much bigger than we anticipated. Not much reaction in gilts. European equities broadly on the front foot. It seems as if the tariff risk appears to be at least fading for now. The AI story, though, very much on the front foot as well this morning. And we've had a series of European stocks doing relatively well this morning. Adidas is the one that really stands out to me. Strong sales. Is that a consumer that is still on the front foot?
And the conversation still being that even with the chaos emanating out of Washington, D.C. in terms of the impact on the rest of the world, the executives you're hearing out of Switzerland still very positive on the United States.
More positive. They love the growth agenda. They love this idea that growth is being pushed in the United States aggressively. Is that something that Europe can now replicate? I guess one of the key conversations that will be taking place in Davos. We will continue the conversation, much more coming up out of the World Economic Forum. That wraps up the opening trade. Of course, the Pulse is next from Davos. This is Bloomberg.
Kickstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Every trading day, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Always on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
David Weston. Join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
It's done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
Bloomberg brings you breaking news 24 hours a day, powered by 2,900 journalists and analysts in more than 150 offices across the globe. Bloomberg Television. Context changes everything.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
And market movers. Live from Davos, Switzerland, for the World Economic Forum. This is The Pulse with Francine Lacqua.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua, live in Davos for the World Economic Forum annual meeting. Now, in a moment, we'll be speaking to the Indian Oil Chairman, A.S. Shani. Also this hour, we'll hear from the Google DeepMind Chief Operating Officer, Laila Ibrahim, the Governor of the Bank of Spain, Jose Luis Escriva, and Novo Nordisk's Executive Vice President of Commercial Strategy and Corporate Affairs, Camila Silves. But first thing is first, I know everyone here in Davos and elsewhere, of course, talking about Donald Trump, tariffs, no tariffs, how big are tariffs? Well, for the moment, we're seeing quite a lot of relief across markets. European stock benchmark actually edging closer to a record high. I'm looking at U.S. equity futures. Look, they're also indicating that there's optimism over more artificial intelligence spending under Donald Trump. And that doesn't, certainly for the moment, it could change, but for the moment, it's offsetting uncertainties over looming tariffs. So you can see the stocks Europe 600 gaining some 0.6%. Now, President Donald Trump continues to loom large over WEF here in Davos as leaders digest a flurry of executive orders and announcements within his first 2 days of office. So let's bring you up to speed with the latest. Trump saying his threat to hit China with 10% tariffs on all imports is still on the table and could come as soon as next month. Well, he's also said he's actually open to Elon Musk or Oracle chairman Larry Ellison buying TikTok as part of a joint venture with the U.S. government. He's also unveiled a $100 billion joint venture with SoftBank, OpenAI, and Oracle to fund AI infrastructure. Well, Trump's policies will have far-reaching consequences now, as Manika Doshi, Bloomberg's senior India editor, also India's oil minister, has said the country is likely to increase its purchase of U.S. oil and gas after President Trump announced plans to unleash domestic energy production. So we're very pleased to also welcome A.S. Sani, the chairman of Indian Oil, India's largest refiner. Chairman, thank you for joining us. Look, there's a lot going on. Manika's on top of this. Everyone, every country trying to understand what Trump tariffs mean. But you have to deal with the previous administration and also these extra sanctions on Russian oil, which makes it more difficult for you to find oil to refine. How's it going?
It's okay. Like when the war didn't start, like before Ukraine, we were buying almost less than 2% of oil from Russia. Right. it was a minuscule portion of our total crude oil supply. Now it had reached up to 30% or so. Overall, India, I'm talking of, not only my company, India. So now we are in a different situation that we were getting 30% of oil from Russia. But again, these sanctions have come up, and these sanctions, as per our estimates, are going to have an effect on around 1.5 to 1.8 to 2 million barrels per day. The total impact of these sanctions will be. And this much oil will be around, again, 25 to 30% of whatever we are processing in the whole year. It is around 5.5 million barrels per day, to be exact. So we have enough sources, we have enough collaborations, we have enough geopolitical and commercial alliances going forward. Maybe it's Gulf, maybe it's OPEC, maybe it's OPEC plus.
Mr. Sani,
Yeah,
and what impact that will have on the price at which you source much of this crude, because you will have to go back to the Saudis, to be able to get more crude from them.
We have never broken our ties with anybody. We have always honored our term contracts which were there with my Gulf partners, with my OPEC partners, and with my OPEC plus partners. Whichever term contracts were there, we were honoring them all the way. Whatever has shifted to Russian was the spot market only.
So how will that rebalance?
Now we will rebalance because spot market.
Could you give us the proportion of what you might now need to raise from other parts of the world?
This much is 1.5 to 1.8 million barrels per day is easily available in OPEC, in OPEC plus. They are already giving indications of unwinding that is going on, that is going to be there moving further. And then US has again come into the market with again increased energy availability from the US. And as you rightly mentioned, that Indian government has also indicated that we are open to buying more energy. Maybe it is gas or it is oil from the US sources. Then Guyana is there, then Brazil is there, then there are different new players are coming up. And then enough of it, in my source, we are very much, our risk is taken care by diversifying.
I mean, the energy policy from the U.S. can completely change, right? And this is more oil, more pumping, more everything.
Yes.
How much does this complicate your life if the price of oil goes down significantly?
No, I'll be very happy. Because we are importing more than 85% of my crude basket is imported. So in that scenario, I have to be very happy. I have to feel very happy if it goes down. Although some of the companies which are into exploration, which are into production of oil, they might feel they might feel bad. But overall, the Indian economy will be very happy at a price which is lower than 75 or near to 75.
But do you expect them to go down? Because we are hearing commentary on supply getting tighter at this point in time. And so at least in the near term.
In my real assessment, we don't expect these to go beyond 80, 82, 83, whichever they have already gone.
Right.
In my assessment, in our assessment as a company or as Indian industry as a whole, we expect them to come below 80 and be range bound between 75 to 80.
Indian companies are in the midst of negotiating their contracts, longer-term contracts with Middle Eastern suppliers.
Yes.
Is that the price at which you're able to source?
No, I can't disclose that, and I can't discuss that.
Give us a broad idea.
Oh, you can amongst friends.
But we expect it to be between 75 to 80 range. That will be the range, and we'll be expecting it to be on the lower side of the range.
Are you expecting a lot of volatility when it comes to the price of oil, to trying to understand what will happen in the next 12 months?
I don't think so. This volatility has happened. Whatever has happened has already happened. Now it is a time for stabilization. Now it is a time for making the industry to allow it to grow properly and it to be stable, and prices have to be stabilized. And if some geopolitical incident happens and if there is a spike, we are robust enough, the Indian industry or Indian economy is robust enough to take care of those kind of vagaries.
Could you briefly talk to us about that volatility Francine was speaking of, the impact it has on your expansion plans, and also India is slowing down. So what do you make of fuel demand in the country, and again, the impact that will have on your expansion plans?
My expansion plans are already on the way, especially when I talk of my company. My expansion plans of adding around 20% of my capacity is already on the way. So
by when?
By 2027.
All right.
So I will be increasing wherever I stand today. I'll be 20% more than that. So they are already...
But could you increase that if things go to better than expected?
We can always push them. We can always try to stretch them more by capacities. We can always go to 110% or 115%. That can be done. But As of now, to meet the demand, we are targeting that whatever Indian demand will be there for gasoline and for diesel beyond 2030 and onwards. For that, we are preparing ourselves and we are making our capacities ready for that.
Mrs. Sani, in the closer term, right now, are you seeing a dip in fuel demand in the country? That sort of, in some ways, validates that slowdown story?
Gasoline, it's not stopping. Gasoline growth is not stopping. Gasoline growth is there around 6% to 7%. It is already growing, even up to 8% also. Yeah, diesel demand is somewhat subdued, but still growth is there at around 1%, 1.5%, which used to be 4 to 5%. Now it is 1 to 1.5%, but still it is a temporary phase. It can improve, and it is not a very long-term arrangement. It is going to be a very small thing, and we have a very strong, when GDP is growing, when industry is growing, when 6.5% growth is predicted by IMF, and last 1 decade it has been a 7% cumulative CAGR. I don't think diesel growth can stop in any way.
Chairman, thank you so much for your time. A very robust conversation there on the future for oil and refining. Ayaz Sani there, the chairman of Indian Oil and Bloomberg's senior India editor, Menaka Doshi. Now, coming up, as President Donald Trump unveils an AI joint venture and scraps Biden's order regulating the technology, we take a look at what's next for the future of AI with Google DeepMind's chief operating officer. That's next, and this is Bloomberg.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Rio de Janeiro, Brazil, and this is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Welcome back, everyone. Now, President Donald Trump has unveiled a joint venture to fund artificial intelligence infrastructure aimed at speeding up development of the emerging technology. This comes as he rescinds former President Biden's sweeping executive order on regulating AI. Now, joining us now for more on the AI landscape is Laila Ibrahim, the Chief Operating Officer at Google DeepMind. Laila, as always, thank you so much for joining us. You're really and have always been a leader in this. With the Trump administration incoming, does it change what you think about the potential or the ceiling for AI is?
Well, I've always been very optimistic about AI, and I think those of us in the field are. I think there's a lot of changes coming for sure with the announcement of a variety of executive orders, but as with any administration change, we're happy to work with the incoming administration and just need the time to work through all the changes that are coming.
Now, you have quite a lot of exciting things at DeepMind. Has anything surprised you about the rollout of Gemini 2.0 so far?
Oh, yeah. 2024 was an exciting year for us. Midway through the year, we introduced a research platform called Project Astra, which started to introduce agentic features and agents of how can we make AI more useful as a universal AI assistant for people in an everyday life. We advanced that in the December timeframe with a flurry of product announcements, including Gemini 2.0, our most powerful AI model to date, being multimodal from the ground up. And that also is a step further towards agentic features.
So is there a feature actually in Gemini 2.0 that people like more than others? Is it something that you could explain to us, and also how that impacts your thinking for the next time round?
Yeah, well, maybe what I can do is tell you, I just mentioned agentic features, just to tell you a little bit more. Multimodal really means the ability, as humans, we speak, we look at pictures, we hear, and that's what we mean also with multimodal. So the fact that Gemini 2.0 is a continued iteration of providing that type of seamless interaction with AI while still being more grounded in factuality and bringing some of those new features. Now, what we would like to get to is, right now I can do a search and say, okay, I want to plan a trip, or I'm at the point right now in my year where I'm trying to think through summer holidays, how I'm going to keep my kids busy. Agentic features would allow an AI to take action for you, but with your approval. So we now have that in the hands of some of our trusted testers to help us think through the guardrails so that we can build this technology, making it useful while being responsible in how we deploy it.
So is that, for the next iteration of Gemini, is that what you lean into?
Yeah, that's in order to make AI more useful, we need to bring in more things like how do we think about an AI having more memory so that it can be useful and know the types of things that you like, or how do we bring in reasoning and concepts and taking actions in a responsible way. So you're going to see more of those types of features come throughout the year.
So this is like a personal assistant that could actually not only help you with research, but execute for you.
Yes, with your approval, correct.
How far away are we from actually almost everyone having one of these?
I think a lot of this will depend on how the testing goes with different stakeholders and how we think about ensuring that it's responsible and useful. I think different people have different tolerances, so you're already seeing some people build tools to help AI be more valuable in an assistive way every day. But our goal for AI from the very beginning when DeepMind was founded in 2010 was to how do we build AI responsibly to benefit humanity. A big part of that is generative AI, but also in our work around AI for science.
So Leila, if you think of the next 2 years, right, 2-3 years, which could be a big rollout of some of this technology, how should we think about some of the pitfalls, right, some of the regulation or the safeguards that we as users should be thinking about and you as builders are putting in place?
I think one of the important things that we've already seen is it's not always accurate. We know this as builders, and I think having people understand that, so we still have the human in the loop to ensure that you're doing your own fact checking, et cetera. We're also thinking about things like local context. What this means in one country will be very different. The humor is different, the cultural aspects. So how do we work with local ecosystems, local governments, academics to make sure that the technology is relevant within the local context? I think that's an area of continued focus. This is generally, we think about if we can find ways to demonstrate the world impact, it's also an important part of how we build trust with society. AI is not slowing down. So we need to think about how do we build this in a more collaborative way.
Yes, is the main roadblock going to be trust from the consumers?
I think trust from the consumers is an important part, as well as how do we ensure that this technology is regulated, but in a right-sized way that allows us to have both the opportunity while mitigating some of the risks.
Leila, when you go around the Congress Center and actually listen to conversations, a lot of the focus this year is on AI. Will it lead to job losses, or is it just a matter of trying to retrain, and whose job is that?
Yeah, actually, a lot of the conversations I'm having with governments as well and universities are about how do we think about the future of jobs and what skills are important in the future. And I think, in my 30 years in tech, I've seen a lot of evolution in the types of jobs that people have. So I think what's important is how do we think about reskilling and upskilling. I'm really encouraging everyone, start experimenting now with AI. It's so important to get familiar with it so that you can become literate. Much like we introduced digital literacy skills in the early 2000s, so that people would have more opportunities with that skill set.
Do you think the new administration in the U.S. is thinking about that?
Yeah, I think governments around the world are thinking about this because they're, and we're partnering not only within Google and Google DeepMind, but also the tech community at large of how do we, AI is a technology that is global in nature, and so we have to think about how we work across the world in bringing this so that it is beneficial to folks.
Laila, thank you so much, as always, for giving us a little bit of your busy schedule. Laila Ibrahim there, the Chief Operating Officer at Google DeepMind. Now, coming up, we'll bring you more from the World Economic Forum here in Davos, including a panel on the path for global interest rates, moderated by Jumana Versace. That's coming up shortly, and this is Bloomberg.
Your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything. The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern. Only on Bloomberg. Context changes everything. Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and the ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
There is this real momentum from Wall Street.
We're basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Welcome back, everyone. Let's head over to a discussion here in Davos on the prospects for interest rates in 2025, hosted by Jumana Versace.
As you know, when you look at long-term interest rates, you can have two explanations. You can have monetary policy expectations. So the succession of short-term interest rates forwarded. And then you have the term premium. What increased in the last 4 months is a term premium. And this reflects increased uncertainty. It's about inflation fears. It's about too lax fiscal policy, starting with the US, and it's about global uncertainty. To say it with other words, and I will conclude with that, but this is a very important point on the direction of interest rate. There is a risk that the benefits of disinflation and monetary easing is weighted or lost by increased uncertainty, economic fragmentation, and a too lax fiscal policy. Or to say it in other words, an economic policy, in order to be efficient, including for growth, must be consistent. And this is a very important lesson for both sides of the Atlantic.
Really interesting. Thank you. Ron, I want to ask you from the perspective of, you have oversight of what investors are doing and how the flows have evolved over the last couple of months. What have you seen in fixed income, quite simply? And is there anything that would explain this backup in yields that we were talking about, specifically in the U.S., by the way?
Yeah, no, Jemima, it's a good question. In fact, I would say that it's quite consistent with what Francois just said. So just given our role, we service institutional investors and we manage money, and about 15% of the world's assets passes through, financial assets passes through our doors. And when you look at those flows, running up to the election, it was fairly stable. There was not a lot of change. There's been a long-term, meaning the last couple, 3 years, overweight to U.S. equities from around the world. Right after the election, there was yet another bump up in inflows into U.S. equities, interestingly coming from U.S. investors. Non-U.S. investors stayed at what was a high level, but didn't add to that, didn't take away from that. But what else happened was even more interesting. Outflows from emerging markets. I think this uncertainty, and I think Francois is using the right word, is uncertainty. Uncertainty around what the election of Donald Trump meant for emerging markets. And fairly significant outflows from long-dated debt. Again, uncertainty around what to expect on that, and in my mind, actually contributing to this term premium increase. The other thing that we observed is that cash levels still remain at very, very high levels amongst real investors. They're off from the peak, but still very, very high. And it's hard to say what that means. It could be more uncertainty. Let me keep some money on the sidelines and decide what to do. On the other hand, the more optimistic way to think about this is there's a lot of money waiting to be deployed.
Nikolai, have you changed your, let's stick with short-term interest rates for now. I'll get to long-term. But have you changed your view on what the Fed may do this year?
No, so I don't spend, well, first of all, I generally don't have a view on interest rates. I'm just trying to look at where is the risk. And I focus not so much on the short term, I focus on the long term. And to me, the biggest risk we are seeing now is the US long end. That we could see a proper backup on the back of the things you talked about, you know, less labor supply, tariffs and so on, with high budget deficits, very high debt levels. And I just fear that there is a moment where investors suddenly decide we want to be paid much more to lend money to governments.
Yeah.
And I think that's the biggest risk to financial assets.
So I was going to say that because
that was Jemima Brzezinski in Davos moderating a panel on the trajectory for global interest rates this year. You can continue listening to that panel and more on the Terminal at Live Go. Coming up, our interview with the S&B president on interest rates here in Switzerland. This is Bloomberg.
You've released, I think, a Bollywood song, a reggae album, a gospel album. You've done a bunch of different genres. Is there any genre you haven't tried that is, because it feels like this next one you're doing is sort of back in your sweet spot.
I did a jazz album that I haven't released yet. It's more or less like spoken word over jazz music. That was a genre that I've always wanted to go into. Quincy Jones hit me to Mr. Mumbles, Clark Terry, which was his teacher. And we had an opportunity to spend time with Mr. Terry, and we did a record together. And that was a genre that I always wanted to venture into because I felt like I had a jazz voice.
So your role in a jazz album is just your singing?
No, I'm spoken word.
You're spoken, sorry.
My voice and my conversation, my poetry, you know.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
US tech is influencing global markets.
Technology is driving business across Europe.
Companies in Asia are betting on tech.
Good morning, everyone, and welcome to our special coverage live from Davos from the World Economic Forum annual meeting. I'm Francine Lacqua. Now, we've heard this week from BlackRock's vice chair, Philip Hildebrand, who says it's not clear how far the Swiss National Bank will need to lean on rate cuts here in Switzerland. A short time ago, the S&P president, Martin Schlegel, also spoke to Jonathan Ferro, who asked him about the rationale for a 50 basis point cut last month.
So in December, we cut the interest rate from 1% to 0.5%. And the reason is that inflation prints were lower in the months before. And also inflationary pressure in Switzerland was considerably lower. So we had to do this big cut in December.
What's the source of the disinflation?
It's several factors. One is energy prices, but also food prices. But then also in the medium term, it's also less second-round effects that we see. This means that the inflation forecast is also lower.
What is it about that makes you uncomfortable about your projections going forward from here?
I wouldn't say we are uncomfortable. If you look at inflation, it's now 0.6, so it's well inside the range. Also, inflation forecast is over the whole horizon, is in the range. But nevertheless, like we have easing inflationary pressure, and this means that we have to be like with the timely monetary policy, we have to adjust rates and monetary conditions to achieve price stability.
You say you're not uncomfortable, but we're getting uncomfortably close to 0%. We're very close now, the Swiss National Bank. How do you think about that as we get closer to zero and think about the prospect of perhaps going back to negative interest rates?
So at the moment, we are at 0.6. This is well inside the range. We have a range from 0 to 2%, and also the inflation forecast is inside the range. But of course, we cannot exclude negative interest rates. We never exclude any measure, actually. And it's also clear that nobody in Switzerland likes negative interest rates. Also, the Swiss National Bank doesn't like negative interest rates. But if we have to do it, we will do it.
You've said before nobody likes it, but they work. When you say they work, what do you mean by that?
We had 7 years with negative interest rates, and in this time we always said we need these negative interest rates in order to make the Swiss franc less attractive, and this really worked. So with higher interest rates, it was pretty clear that the Swiss franc would be under even more appreciation pressure.
Is that something you have to think about more going into 2025 with the incoming administration, the worries about geopolitical risk rising, and the potential that once again your currency becomes a haven? Is that something you're considering a little bit more in 2025?
The Swiss franc is traditionally a safe haven, so we are used to this. But of course, like for Switzerland is a small open economy, so open markets are very, very important. So it's like the geopolitical risks and also like trade conflicts are not beneficial for Switzerland.
When I look at dollar Swiss, the Swiss franc is weaker against the much stronger dollar. When I look at euro Swiss, the Swiss franc is stronger. On a trade-weighted basis over the last 6 months, it's been quite stable. How are you and the team considering the FX channel at the moment? Is the Swiss franc too strong, too weak, just right? How are you thinking about things?
So we look at monetary conditions overall. This is on the one side the interest rates, and on the other hand it's the exchange rate. And these monetary conditions have to be right for the economy, and at the moment they are right, they are appropriate.
Just to explore a hypothetical, just to understand your reaction function a little bit more, you said that all options are on the table potentially when it comes to things like negative interest rates. Currency intervention was a big part of your predecessor's toolbox. Is that something that's on the table for you?
So we always said, and will always, we said in December that we are ready to intervene in the FX market if necessary.
Are US sensitivities to that important to you?
I mean, for the Swiss National Bank, we have the one tool is the interest rates and the other tool is the exchange rate. And there these FX interventions have worked in the past, and we are, if necessary, willing to use them again.
Just to understand that a little bit more and to follow up, the Trump administration before has called the Swiss currency manipulators. I want to understand whether that's a consideration for you at all, or whether that's something you'd be willing to ignore just to make sure that you hit your own objectives.
So our mandate is price stability in Switzerland, and for this we use the interest rate and the exchange rate. So this is our mandate, and we'll follow our mandate.
And if that comes from criticism, with criticism from abroad, that's not something that influences you?
Our guideline is our mandate, and this is enshrined in the law. This is what we look at the Swiss National Bank.
You've been at the Swiss National Bank for quite a while. I believe it is the 10-year anniversary of removing the Euro-Swiss floor. I remember that day very well. You do too. You were in the trading floor. Can we just reminisce about that a little bit? What was that morning like? Because that was a big shock. I wasn't in New York then. I was in the city of London. And I remember how big the move was in foreign exchange. What was that like for you?
Oh, this was certainly a day that I will remember all my life. It was a very stressful day, obviously, because we had to prepare this removal of the minimum exchange rate. And over the years, we really built something like a fortress to protect this minimum exchange rate. And then we had to remove this fortress overnight without anybody really seeing it. And I think we look at the data quite carefully and think we were successful in removing it without anyone noticing it.
Can I ask you a final question? Because we all noticed once it was removed. Can I ask you this final question? Negative interest rates potentially on the table. Currency intervention is something that you say you could explore in the future if you need to. What about another cap, another Euro-Swiss floor? What was the lesson from that experience? Is that something that you would take off the table?
This is not something that we discuss at the moment at the Swiss National Bank.
Is it part of the toolbox?
I never exclude anything, but this is really not something that we discuss at the moment.
That was the Swiss National Bank President Martin Schlegel. Coming up, the ECB expected to reach its 2% inflation goal by the middle of the year, allowing for lower interest rates. We'll speak to the governor of the Bank of Spain next. This is Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Every trading day, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
I'm David Weston. Join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's emissions.
Done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
We have to engage in a constructive approach in our relationship with the new administration. I do believe that Europe and the United States, we share a strong transatlantic bond rooted in common values, history, culture, and of course common interests. So, you know, at the end of the day, a trade war is not in the interest of the US and of course in the interest of the European Union. So let's focus on how do we strengthen this transatlantic relationship and avoid any kind of misunderstanding.
So the Spanish Prime Minister Pedro Sanchez is speaking to me earlier. Now, ECB officials are set to cut interest rates next week, with inflation on track to reach the 2% in the coming months. Well, joining us now is José Luis Escriva, the governor of the Bank of Spain. Governor, thank you so much for joining us. I think this is our first interview together because you joined the Banco de España 4 months ago. So congratulations on the job. I mean, it's going to be quite volatile and difficult. You have, of course, an ECB meeting next week. Is an interest rate cut a done deal?
Well, we have to, the meeting itself is relevant. The discussions in the Council will be actually very relevant. And we spent actually 2 days there discussing a wide variety of issues, indicators, inputs provided by the staff. So it's, I would not pre-commit to a decision, but certainly I would say the market expect a further cut of 25%. Seems to me that this is the most likely scenario, but I don't see any reason at the same time to. My personal view is that's fine. I mean, to continue with our gradual approach to normalization of monetary conditions in the euro area.
Governor, how do you see the stickiness of inflation? What do you worry about that you're not able in this last mile to get down? And this is even before possible tariffs from Donald Trump.
Yes, I think this is primarily confined to service inflation. And it's true, and it's we are making research on that. The expectation is that service inflation that we at present is hovering around 4% should decline over the next 6 months around 3%. I mean, there are good reasons to believe that this is going to be the case because wage pressure are diminishing and forward-looking indicators of wages are pointing in that direction. But of course, we need to wait until this expectation, this forecast is materializing.
Yeah. When are you expecting that to materialize again?
I would say that over the course of this year, actually already 2025, and the incoming data will be relevant. I mean, when we say that we are data dependent, I mean, this is in our communication, this is really so. I mean, in a situation of uncertainty, I would some issues to be clarified. we need to wait for hard data to confirm our forecast.
Yes, it's not that easy because it's hard data, but you also have to look at expectations to make sure that you don't go too hard or one way or the other.
Precisely, but I would say that in a situation of particularly high uncertainty, hard data, incoming information, meeting after meeting, proves to be more important.
But because it doesn't behave the way that you think it should? I mean, for example, what does it take for Europeans to start consuming properly?
No, let me tell you something. At the same time, there is high uncertainty. The reality is that even if you look from June up to now, but more specifically since the last meeting of the Council, basically the information we are gathering is confirming our central scenario. So there is a lot of uncertainty, two-sided, but at the same time, the incoming information is confirming the central scenario, which is one of gradual converging of inflation to 2% and of a recovery, which is not particularly impressive, but a slow recovery of the EU economy as a whole. It's true that there are some downside risks to growth, and this particularly stems from weak domestic demand, not only consumption, but I would say more problematically investment.
But Governor, I mean, internationally, we don't really know what happens between the U.S. and China, and Europe could be at the forefront, right, of these pressures.
Yes, I mean that's one of the sources of heightened uncertainty, stemming from geopolitical risk, but also from, let's say, what the U.S. administration is going to ultimately do in a number of areas. I mean, we have made a lot of simulations internally about impacts, might be potentially very impactful. I would say that on growth, I mean, the policies that are announced are not particularly growth enhancing, not only for Europe or for the rest of the world, but even for the US, if we take a long-term perspective, doesn't look like. I mean, and at the same time, I mean, the policies can be potentially inflationary in the US. It's less clear whether there's going to be spillovers to the rest of the world, but this is something which requires careful monitoring over time.
But does it mean, Governor, that through your modeling, you're also able to say, for example, look, if there's 15–20% tariffs on Europe, or if there's inflation going up by, let's say, 0.5% in the US, that means that our interest rates will have to do this. Is that possible at this point in time?
First, the most difficult thing to calibrate is even the impact of tariffs, because it depends very much on the reaction of third countries, which are very, very difficult to predict. So the first source of uncertainty stems from what the Trump administration ultimately is going to do. But then the reaction of the others, I mean, and the impact on the economy, I mean, the instruments that we have, since this is not something that happens so frequently, I would say are not sufficiently reliable. Or I would say that we have to operate, unfortunately, with a high uncertainty. Right. But this is what we do all the time, central bankers, to deal with uncertainty in a way or another.
But so does it also mean that the ECB is maybe a little bit more sensitive to what happens with the Fed and interest rates there, interest rate expectations?
I mean, I would say that to the extent that it impacts us to different channels, I mean, the chain rate channel is one of them. But of course, we need always to factor in all these elements within our framework. I would say that uncertainty is high, I mean, no doubt. And that's the reason why our data-dependent optionality, full optionality, is to retain this full optionality is more important than ever at the present juncture.
Governor, thank you so much, as always. That is José Luis Escriva, Governor of the Bank of Spain, giving us a little bit of his busy schedule for his first interview, actually, on Bloomberg. Coming up, the U.S. targets Novo Nordisk's blockbuster diabetes and weight loss drugs for price cuts. So we discuss all of that next with the Danish drug maker's Executive Vice President of Commercial Strategy and Corporate Affairs. That's next, and this is Bloomberg.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Bringing you up-to-the-minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve, and this is Bloomberg.
Well, the head of Novo Nordisk attended crisis talks with Denmark's prime minister amid rising tensions with the U.S. over Greenland. President Trump has threatened tariffs on Denmark if it doesn't give up the territory, and the U.S. is by far the biggest market for the pharmaceutical giant. Well, joining us now, Camilla Sylvest, Executive Vice President of Commercial Strategy and Corporate Affairs at Novo Nordisk. Thank you so much for joining us. Look, you go into the corridors of the Congress Center here at Davos for the World Economic Forum, and everyone's really trying to figure out what Trump 2.0 means. You're really in the firing line. Denmark is at the moment. What do you think will happen?
I think it's evident here at the World Economic Forum that a lot of things are going on, a lot of things are also changing. I think there are some things that are not changing, and that's for sure, you know, the need for working with serious chronic diseases, making sure we can overcome those. We've had a lot of discussions about new tools, artificial intelligence, quantum computing that can help us actually address some of the health problems of the future. So those health problems, especially around serious chronic diseases, are evident and will continue to remain, and we are very happy to work with also policymakers around the world to find out how do we address that.
But when the President of the United States says, look, get me Greenland or I'll put very big tariffs on Denmark, how does Novo respond?
I think we're very focused on our commitment to drive change to defeat serious chronic diseases. So it's not for us to respond to something that is a discussion in a different space. Nevertheless, of course, we follow this with great interest, as we do with many of the things that goes on in the political landscape, also here in Davos. And of course, we notice also the need between a lot of parties that are working on health problems and climate problems, and of course also how we can together try to overcome some of those. So this particular collaboration between the private industry, between policymakers, is there, and it needs to continue, and we are quite happy to take part in that.
Novo Nordisk, of course, has had some incredible success because of the weight loss drugs. You have competitors, especially Lilly, that is doing really quite well in the space. How does Novo try to avoid losing market share?
Yeah, so our primary focus is innovation. I think that goes for some of our competitors also, which is a really, you can say, healthy approach to keep bringing better and better treatment to patients. And for more than 100 years, we've been quite focused on insulins, but we've now moved into a new space that will address serious chronic diseases in obesity and diabetes, but also in cardiovascular health. And this is our primary focus. We are quite happy to see that some of the new tools that are being discussed here, also in Davos, like generative AI, can actually help us across our value chain to keep improving our efforts. So we are quite hopeful that we will continue to bring innovations to patients.
And continue gaining in market share? Or is that, again, the next couple of years will be very crucial where you end up in 5 years?
It's a clear ambition of ours to be a leader in our space, and if we just think about the unmet need, that continues to increase. Today we know that we have close to 40 million children below the age of five that are living with serious overweight or obesity. And if we're just looking at children in general, it's close to 400 million below the age of 18, and we're getting close to 1 billion people living with obesity when we take everyone together. So this is really an alarming rate, because we know that this is a key driver of other serious chronic diseases like diabetes, like cardiovascular disease, like chronic kidney disease. So that's where our innovation comes in, hopefully, and it's a clear goal of ours to continue to drive that change.
A number of big drug makers, of course, are facing patent losses by the end of this decade. This is something that the industry has to grapple with. Do you think that will lead to more consolidation, more M&A in the industry?
I think for sure there will be companies that will be producing biosimilar versions of great brands. That's natural. It's part of sort of how the industry is organized, and we have a certain patent life, and after that there will be others. And that's why innovation keeps being very important to us, and we hope to keep bringing that to patients. It's a big task, and that's why you also see us continue to scale, both in production and product supply, to bring those treatments to patients, but also in terms of number of people we employ in our company. But of course also in terms of how we keep driving our pipeline, also in terms of business development.
How much are you spending on innovation?
We're spending quite a lot, and quite a big part of our sales goes directly back into innovation, either organic innovation in research or in business development. And you see us making, more and more collaborations, partnerships, deals also.
Do you worry that actually health in this period of uncertainty, geopolitically, tariffs-wise, is getting less of a focus here in Davos?
I think it's quite important to keep focusing on the problems of the world and how we can contribute to solving those. And we also know we cannot do that alone, so we need to do that together. I've met, a lot of very engaged organizations at this meeting, engaged politicians, and also private companies that actually all are working on solving health crisis, environmental crisis, and of course also political issues. So we continue to play our role in that, but no one can do this on their own.
Camilla Silves, thank you so much for joining us. That was the Executive Vice President of Commercial Strategy and Corporate Affairs at Novo Nordisk. Now, we have more great interviews coming up from Davos today, including Volodymyr Zelensky, the President of Ukraine. We'll also be speaking to Javier Milei, the President of Argentina, and Alexander Stubb, the President of Finland. Now, plenty more to come right here on The Pulse this week from Davos. Tomorrow on the show, we also speak with the French Minister for Foreign Trade, Laurent Saint-Martin, the NATO Secretary General Mark Rutte, European Investment Bank President Nadia Calvino, and Marsh McLennan President John Doyle. Up next, Bloomberg Brief, Danny Berger and Manus Craney in New York from Davos. This is Bloomberg.
DraftKings hit a milestone in the second quarter of 2024. For the first time as a public company, it turns a profit.
Is this a new era for DraftKings?
There's an inflection from when you're cash flow negative and you're operating off of equity raises from the past
to when you're self-funded and you're cash flow positive and able to control your destiny a lot more.
You've had your first quarters of profitability now. Does that take pressure off? Does it increase pressure?
I think it increases pressure. I mean, once you start making profits, people expect you to make more, and all of a sudden you're valued on a multiple of those profits as opposed to the theoretical what could be. So very important, I think.
When you're cash flow negative, you've sold a vision of what the company should be working on, and you're very focused on working on that and delivering against that. When you've pivoted to profitability, the world of what you can work on is a little bit open, and there's a lot of different ideas, and it requires more focus than ever to make sure that you are prioritizing on the most important things that are going to deliver the most value.
DraftKings' solid standing in a booming sector gives them the luxury to play the long game. They're not under pressure to cut costs.
When you have really strong revenue growth, you don't need that. If you look at where we are today and where we want to be and where we believe we will be, the vast majority of the incremental EBITDA is not coming from any cost reduction. It's coming from increased revenue.
We don't feel like we need to cut costs because we're growing our revenue so much. We want to grow our revenue into our existing cost structure, and there's no need to reduce the cost as long as we're being efficient with what we allow our cost growth to look like.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Good morning from our global headquarters in New York. I'm Menace Cranny. Welcome to Bloomberg Brief. Let's set that agenda.
Trump's tariff ambitions. The president floats 10% for China and warns Europe on treating the U.S. badly. Doubling the base with a boost from the NFL to Squid Game, Netflix surges on a record quarter. And it's day 2 in Davos with a host of interviews you don't want to miss from the president of Finland and State Bank of Indian chairman. Good morning, Manus.
Danny, good morning. We may be in a state of weaponized uncertainty on policy, but these stocks are flying higher as we have the birth of Stargate. More on that story on Oracle, SoftBank, and OpenAI. And there's relief that we've not gone to max tariffs with China on day 2. 10% is what's floated. By the way, the Russell up for 6 days in a row, going into the 7th day up here. We're looking at that up nearly 6% in 6 days. Lower oil prices. Bank of America say the froth has come off these markets, bond markets. 456 is where you are. Gradualism, as they say, in terms of the tariff story on China. Maybe it's an appeasement to the vigilantes and listening to Scott Besson. Anyway, this market is not very long of bombs, by the way. Bank of America say we are net 20% underweight, the most since October 2022.
By the way, some huge moves in individual stocks, specifically Netflix, taking off more than 14% in the pre-market, Manus. They reported a record subscriber growth, 18.9 million new customers. That's in large part thanks to live sports events and the return of Squid Game.
Okay, got a queue up for that. Oracle surging as the company forms the AI pact with SoftBank and OpenAI. The initial investment, $100 billion. The scale-up, Danny, is to 500. That's the ambition.
ARM also rising on the back of that news of SoftBank's joint venture, along with NVIDIA and Microsoft in the big AI spend.
And coming up this hour, we're live to Davos. We speak to the Finland President, Alexander Stubb, and the State Bank of India Chairman, C.S. Shetty. Then in just a few moments, Seema Shah joins Danny and I from Principal Asset Management. So, look, I mean, it's like a flamethrower of risk, isn't it? I love this AI story. I haven't watched Squid Game yet. And I haven't. But I did watch some football on Christmas Day, to be fair.
I'm sorry, you haven't watched Squid Game, but you've watched... Who are you? What have you done with Manus Cranny watching football?
Transplant to America. Look, it is a flamethrower across this tech market this morning.
But it's amazing. It's not just tech, right? And it is in large part tech. Yeah. But it is a broad rally that's happening not just in the U.S., but Europe. The Europe Stock 600 reaching an new record, the DAX reaching a new record too. There's maybe relief that on week one so far, we haven't got these broad tariffs yet. How long does that last?
And this goes back to the very principle of Scott Bessent potentially being in one ear versus Howard Lutnick and other camps in the other. Right now, this is a policy of appeasement to the bond market. But listen to the conversations in Davos. You listen to the Norges Bank CEO or the head there saying he is still worried about a peak in these rates in the United States.
Yeah, there's an irony of everyone fretting about this in Davos. It's clear where the center of power has shifted. It's not Switzerland, it is DC.
Well, the nexus of power is in the tech sector. Oracle, Microsoft, NVIDIA. NVIDIA will play into this in terms of supplying part of the gear that Stargate is going to need. This is the new AI deal, which in many ways, Danny, as I say, it's a flamethrower over tech risk this morning. 10% tariffs is less than we thought. Let's get to Seema Shah. Seema, this AI podium deal that was announced yesterday, for me, it really sets the stage of further opening up the gap of US exceptionalism when it comes to tech triumph.
Good morning, Manus. Yes, I would agree. I mean, I think what we're hearing at the moment is it's just reinforcing some of the narratives that were already in play. One being US exceptionalism, and the second, which is of course related, is this continued advance for the technology sector. When we're looking at AI, there may well be, of course, there are fluctuations, there are ups and downs, a couple of disappointments along the way. But this is a long-term move, and we're seeing more and more governments actually talking about, even the UK government really talking about the potential that they could gain from investing in AI. So this is a narrative which is going to continue to go on, and any countries that have got significant exposure to AI, specifically the US, for example, are really going to be key gainers, not just in the short term, but we think over the long term as well.
But Seema, as I mentioned to Manus, at the moment, it is a rising tide lifting all boats. For the past 6 sessions, 2 out of every 3 stocks in the S&P 500 has risen higher. That is a new record in this market. It's the broadening that so many people had called for. Do you think it's enduring?
Well, it's a good point, because look, I think the AI story is more of something which is a little bit more structural or strategic asset allocation perspectives contributing to that run in AI. What is lifting up small cap and some of the other sectors is quite tactical. It's really based at the moment on optimism that maybe Trump isn't going to move forward with the full length of tariffs that he had almost threatened a few weeks ago. But this is really, really early days. Now, if you were in the next few days, and we know from Trump 1.0 that announcement can come at any point, if you were to wake up to a headline suggesting that he's moving forward with the universal tariff, or really moving forward with a 20-30% tariff for China, that's going to set markets back again. So I think for investors, it's important to keep in mind that just one day's move is not going to be reflective of what we can expect to see over the next year or so. And so it's really important to look for some of the fundamental themes that are going to drive markets that can mean that you can have gains for more than just 24, 48 hours.
Well, let's just talk about that, because one of the repricings has been in the bond markets, and the narrative is this, that DOGE, deregulation, and energy independence, the trifecta that is set by Scott Bessent, will be the dominant over the potential for inflation from tariffs. Is that a sufficient narrative to be long of duration right now? Do you bank on that relative to the inflation risk?
I think it's a brave one. So I think that when we're looking at the fiscal story, we know that there is a desire to cut taxes. I think there's a certain correct reassurance that Scott Bessent is going to be a moderating voice, someone who really understands that there are major risks involved with somewhat risky policy on the fiscal side. So that is reassuring. But the inflation story for us is a little bit more important in terms of the upside risks for the economy, for the global economy, is more on the inflation side. That's what we're most worried about. So from a duration perspective, 4.5% where it is today, around that level, it's somewhere in that range. I don't feel strong enough at this point to start going overweight duration. And if anything, I think there's a little bit more opportunity on the short end of the yield curve.
But Seema, just to the point that you've been making in terms of, how do you operate in an environment where there seems like there are gains to be had in just 24 to 48 hours. A lot of the inflation story does matter on fiscal policy, on tariff policy, and we just get these market wiggles depending on what headlines come out. That seems to be the unforeseeable future, considering this uncertainty is more of a feature of Trump policy, not necessarily a bug. So what do you do when there is that kind of headline volatility? Do you need to stay close to the ground? Do you try to chase it? Do you have certain convictions that you tie yourself down to?
Yeah, look, this is going to be a really choppy trading environment for all investors, wherever you're based, and certainly whatever market you're looking at. What we're trying to align ourselves to at the moment is what are those key themes that we think are going to last throughout any of the volatility that we may see. So one of them is US exceptionalism. The Trump administration, for anything else that they're going to do, they're very keen on improving growth for the US. So we're not so worried about recession risk. So in that case, we're still risk on. That means being overweight equities, being overweight credit. And on the inflation side, because inflation, we do believe, is the key threat that the market will be tormented by almost for the duration of 2025, it means that you still have to have some exposure to inflation mitigation assets. That's going to be important, and there are considerable gains to be had there. And then on the other side is that, look, there is, as we've seen just today, that tariffs may not come to the extent that people have been worried about. It means that you do need to have global diversification. We do believe in US exceptionalism, but there are opportunities around the rest of the world. And the two key ones that we're looking at the moment is Japan and India. One of those reasons is because they are less vulnerable to the tariff threat from the US. And of course, we believe that they've got strong fundamentals from an economic perspective as well.
Well, one market that's trading higher this morning is Europe. Europe's at a record high. And I'm just curious, we're just looking at some of the Bank of America positioning. We flipped from being underweight before Christmas to a net overweight of 26%. Now, we haven't seen that kind of pivot for a while. Two of the tail risks that everybody tells us is China could get it right and Europe could be rehabilitated. If it is incremental tariffs, that's a boost to the narrative for being long of a tail risk of Europe, is it?
Yeah, absolutely. And I think what investors are looking at, though, which is correct, is that because valuations in Europe are so cheap, you don't need to have a major positive surprise. You just need a bit of a positive surprise, and you can get some significant upside to European equities. The question for us, though, is that how long can that be maintained? To us, the fundamental story for Europe is still quite worrisome. We're worried about the growth prospects. We worry about the inflation. We worry about whether or not the ECB will really be able to avoid recession for the bloc this year. So from our perspective, there could be some upside days, weeks, even a month or two, but whether or not it's going to last over a full 9-12-month period, I think is a little bit more questionable.
Yeah, the bar is low, perhaps with good reason. Seema, thank you so much for joining us this morning. Seema Shah of Principal Asset Management. Coming up on the show, we're going to take you back to Davos for an interview with the President of Finland. That's coming up. You don't want to miss it. Stay with us here on Your Brief.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
US tech is influencing global markets.
Technology is driving business across Europe.
Companies in Asia are betting on tech.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets.
Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Earnings season is here.
The earnings palooza right here.
They're going to come in hot and heavy.
Bloomberg is first to break the numbers.
Microsoft earnings now crossing the wire.
Lam Research in the semiconductor space. AMD, Alphabet, we've got a lot to digest today.
With the smartest insights.
If the economy's strong, shouldn't that be good for earnings?
Consensus estimates are around 12% growth for the quarter.
Stick with us, a lot more coverage of all those earnings.
Continuing coverage on Bloomberg.
It's your Bloomberg Brief, Danny Berger and Manish Cranny in New York. And Manish, I think you put it really well, a flamethrower across risk. You have a couple things happening. One, you have AI, the dominance of which of more investment coming into the U.S. You have Netflix earning and a really broad equity market rally, too. It's not just the U.S. where the breath is looking really positive. It's Europe as well at an all-time record.
Which Seema Shah actually just not poo-pooed, but she said, look, you might get a couple of weeks, you might get a month of this euphoria in Europe, but she doubts the capacity to sustain. Recession is a real risk, and the ECB are going to have to do more.
Well, let's get to some of those topics and head over to Davos. Bloomberg's Stephanie Flanders is sitting down with the president of Finland, Alexander Stubb. Stephanie?
Thank you so much, and thank you, Mr. President, for joining us. Let me get straight to the question of the underground cables that have been ripped up by ship anchors several times in the last 15 months. You think that's sabotage?
Well, I mean, we attribute when we know exactly what's happened. So we've had 3 of these cases in the past year. First time, we let the ship go. I think that was a mistake. Second time, it was in Swedish-German waters. They boarded. And third time, we actually confiscated. The investigations are still ongoing, and there are always a couple of options. One is sabotage, and the other one is mistake, and the third one is incompetence.
Do you have evidence for sabotage?
Well, our investigation is still ongoing, so we can't really take a stand on that. But the bottom line is that it doesn't really matter who does it. The most important thing is that we're able to prevent it, and if we're not able to prevent it, that we can actually correct it very quickly. Now, of course, we have a Baltic Sentry operation in the Baltic Sea, so I think our situation picture is better than what it used to be, and we're able to deal with it, and I think the Finnish model actually works.
You have said, as you said, that when you find the culprit, you'll attribute it, but that hasn't happened.
No, not yet. We're very much a rule of law-based society, so we have a criminal investigation, and once that is finished, then we draw our conclusions.
And you think that you're confident that the naval drones that you've now agreed would patrol the Baltic will be enough to prevent this?
You can never prevent to be 100% sure, but you need to have some kind of a model, and our model is very clear. It was the private sector that told after an hour that the cable had been cut. Our authorities then identified 1 of 2 ships that it could have been. They went on top of the other one and moved it to our waters, and the rest followed. So, you can't prevent every case, but because we are now controlling the shadow fleet better, because we have better underwater infrastructure, because we can actually deal with different operations, I think we're much better at it.
How would you, if you do find evidence of sabotage, and you name the culprit, what would you expect to be the further ramifications of that? Do you consider it to be an aggressive act by another country?
No, actually for us it's then a deterrent that it wouldn't happen again, because it's not in the interest of anyone. You have to understand that the Baltic Sea is a small sea. It takes about 30 years for a drop of water to come in and out. That means that there are 2 issues there. One are the underwater cables and the critical infrastructure. The other one is an environmental catastrophe, and it's not in the interest of Russia or anyone else to have an environmental catastrophe. The big problem we have now is that they are basically transporting this sanctioned oil on ships that are not good. They're old, they're decrepit, and the rest of it. So this risks the environmental catastrophe more, so we have to deal with it.
Obviously, President Trump is now back in office, and in recent weeks he's made comments about not ruling out military action to take control of Greenland and other areas. What's your response to that?
Well, I think the response is that in foreign policy you have to deal with things case by case, right? So we all understand that Trump has changed American foreign policy, and it's more transactional. We deal with that. And of course, we look at it from two tracks. One track is our own, what is in Finland's interest. A country like Finland produces 60% of the world's icebreakers. The alliance needs 70 to 90 icebreakers. Is there a deal to be made there? Actually, it was Donald Trump's idea originally to do something on icebreakers. And the other track that we look at is, of course, our Nordic track and EU track and international law track. I come from a small country. For me, it's very important 3 principles are met. 1, independence of a nation state. 2, sovereignty of a nation state. And 3, territorial integrity of a nation state.
Well, those principles, do you think that Donald Trump is, given his past record, you say it's case by case, but looking at his past record, he's someone who in any number of realms has ignored very long established norms. Do you expect him to respect those principles of the integrity of national borders and sovereignty?
Well, I hope it is in the interest and in the value base of the United States to do that. You have to remember that there are 2 things in my mind from a European security perspective that drives Donald Trump and his administration. One is peace. He wants to make peace. He did it in the Middle East. He wants to do it in Ukraine. And in order to do that, you need alliances. You need some kind of rules. And the other one is that the U.S. wants to retain its position as a superpower. If you want to be a superpower, you have to have allies. And the closest allies, about 25% of the world's countries, they come from Europe. And I'm sure that our transatlantic partnership will be strong even after these 4 years.
You have, in your previous career, you've thought very deeply about NATO, about European defense. I think many people would say that the first Trump administration actually had a constructive impact on NATO.
Very much so.
And I just wondered how you think, how should NATO and European members of NATO respond and make the most out of this second Trump administration?
Listen to what Trump has to say. He was right originally when he said that Europeans are not taking care of their defense enough. He was right in saying that we're not using enough for our defense expenditure. I'm not speaking for Finland because we're up at 2.4, 2.5%. We have one of the largest militaries in Europe, and we actually buy American military material.
You're not at 5%, though.
We're not at 5%. The United States is not at 5% either. So the fact that he's pushing us to do more on our own, I think, is a good thing. So what I want to say is that listen to what President Trump has to say and act accordingly. A country like Finland will certainly do that.
Do you think people talk about stretch targets? Do you think 5% is a useful stretch target? Is it even useful to talk about it?
Instead of looking at the percentages, look at what you have. So I think it's very important that you have a strong Air Force, you have a strong Navy, and you have strong land forces. And then you have the military capacity, air, land, and sea, long-range missiles, F-18s, F-35s, artillery, and the rest of it. So kind of you have to put your money where your mouth is, in a sense that it's not the percentage that counts, it's the stuff that you have. One example, the US has something like 30, 34 different military systems. Europe has over 170. There's a lot of rationing to be done there.
We're also coming up to 3 years on the war in Ukraine. How do you think it should end? What would you expect over the next few months?
Well, I think it obviously should end first in a ceasefire and then a peace agreement. And I think that peace agreement needs to respect at least 3 principles. One is the independence of Ukraine. 2 is the sovereignty of Ukraine. In other words, its right to decide whether it wants to be in the EU and or NATO. And thirdly, it needs to respect the territorial integrity of Ukraine. And I think Trump has a huge role to play here. And in many ways, a Ukrainian victory is an American and a Trumpian victory.
You've talked about China actually potentially playing a key role in ending the dispute. Some people think that will be Trump's role, is to pick up the phone to President Xi. What role can China play?
There's an interesting connection here, and we already saw that. I think President Trump spoke with President Xi Jinping on Saturday, and I spent 3.5 hours with President Xi Jinping in October at a state visit. And my message is that China has influence on Russia. So if there's a connection between President Xi and President Trump on, yes, we need to muster a peace deal, I think it's pretty much the job of President Xi to convince Putin time to do a deal. And then it's the job of Donald Trump to find a deal which is fair, just, and where there's no peace without Ukraine or no peace without Europe.
President Alexander Stubb, thank you very much for joining us. Back to you, Manos.
Thank you very much. Stephanie Flanders, Bloomberg Head of Economics and Government. Good to see you today. More to come from Davos throughout the week. And don't miss our exclusive interview with the Ukrainian President Vladimir Zelensky. That is at 10 a.m. Eastern. Other stories trending on your Bloomberg terminal. This is what we've got for you. President Xi Jinping and President Putin held a video call the day after President Trump's inauguration to discuss bilateral relations, responding to external uncertainties. It was reported that both China and Russia are also open to dialogue with Trump on the war in Ukraine if appropriate signals come from Washington.
Google is backing AI developer Philanthropic with another $1 billion. It becomes one of the most promising rivals to OpenAI. The San Francisco-based company is perhaps best known for its family of large language models, which compete with ChatGPT. Anthropic declined to comment, and a Google spokesperson did not immediately respond to a request for comment.
Well, Netflix ended the year with a bang. The company's biggest quarterly subscriber gain in history, boosted its first major live sporting events, and the return of Squid Game. The streamer added nearly 19 million customers, which was more than double what Wall Street expected, and brought the global subscribers at Netflix to more than 300 million. Let's talk a little bit more about that. It was a blowout quarter. Charlie Wells has been tracking the numbers from Netflix. I mean, this was blowout, and they managed to raise prices. Charlie, good morning.
Good morning, Manus. I mean, the question here is, how do they keep it going? This was such a blowout, as you said, that I think momentum is the real question here. And when you look at that shareholder from yesterday, that shareholder letter, from yesterday, you'll see a term in there that really speaks to the forward plan. And it is not a word, but it is eventize. Now, I looked that up in the Webster's Dictionary, and it is not there. If it's not a word, it certainly is a business plan. And what we see is these marquee events, these events like a boxing match back in November with Mike Tyson, they drive subscribers, and that is something that this business is going to want to focus on in particular, but they also provide that captive audience that advertisers love. And Netflix is plunging headlong into advertising. They're trying to build out that business. They want to get enough scale to please advertisers by the end of this year. So it's these events that provide content. They bring in subscribers. They bring in record numbers of subscriber growth, but they also help that advertising business.
Elsewhere in the world of tech, Charlie, Dan Ives is talking about this new AI announcement that's been made between SoftBank, OpenAI, and Oracle in conjunction with President Trump, saying it heralds a new era of AI spend in America. There's already been a whole heck of a lot of it. How does this so-called Stargate change things up?
Danny, I mean, AI and Trump have a lot in common in that there's a lot of words, but investors really need to parse into what is actually changing here. And when you look at this Stargate announcement, you know, it's a $100 billion investment bringing together OpenAI, Oracle, and SoftBank. They're going to invest in critical AI infrastructure. We've heard a lot about this. Now, what actually changes here are two things. On one front, you got Trump talking about deregulation on the AI side. He is rolling back some of these Biden-era safety regulations on AI. He's going to use executive actions and some presidential powers to speed up some of these construction projects and bring in energy as well. But you also get the coordination here, and that is really crucial for AI. You've got all of these companies coming together with government because what AI companies say that they need chips, they need energy, and they need data centers. Now, those data centers use as much energy as some cities, so that coordination piece is really important. So what you're seeing here from at least that announcement is deregulation and coordination.
Yep, a lot of spend is going to be necessary on energy. Charlie, thank you so much. Bloomberg's Charlie Wells. Coming up, President Trump widens his tariff threat beyond the Americas. We're going to have more on that next on your Bloomberg Brief.
recent years, you created an institute, the Jane Goodall Institute, and what is that designed to do?
Well, that was started in 1977 when by then I had a little research station and 4 of my students were kidnapped and everything shut down. And so some friends of mine said, well, let's start an institute so that this research can carry on. Bless them. So that was 1977, and it was set up to study, conserve chimpanzees and other animals and educate. And it's developed since then. So it's, you know, we've got 27 Jane Goodall Institutes around the world. And then I realized at some point that the African people living in and around chimpanzee habitats right across Africa were struggling to survive. There was crippling poverty, lack of health and education, moving deeper into the forest, being exposed to diseases like Ebola and HIV from the chimpanzees and vice versa. It hit me. If we don't help these people to find ways of making a living without destroying their environment, conservation won't work.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
From our global headquarters in New York, welcome to Bloomberg Brief. Danny Berger and Manus Cranny here. Let's set your agenda.
Trump's tariff ambitions. The president floats 10% for China and warns Europe on treating the U.S. badly. Doubling the base with a boost from NFL and Squid Game. Netflix surges on a record quarter. And Davos is in full swing. Don't miss our live interview with the State Bank of India's chair, C.S. Shetty. That's coming up in just a moment. Danny, good morning. A flamethrower for risk. That's my phrase of the day.
I love it. It's very evocative. But it's also added not just tech, but maybe a relief of concrete tariffs. Yes, he's adding in the countries day by day that he wants to add tariffs to, but we don't have exact legislation yet. S&P 500 closes above 6,000 for the first time this year yesterday. We continue to move higher. It is the NASDAQ 100 leading us higher, thanks in part to insane numbers for Netflix. I mean, hard to really underscore how good they looked. We're up 14 1/3% in the pre-market for them. Russell 2000, that takes a breather after 6 days of advancing. Your 10-year yield, that closed below 4.6%. It's a very benign environment that we've been in, despite all the concerns about inflation to come. I mean, Manus, we were just speaking with Seema Shah, who said that she sees inflation is here on its way. We've gotten that commentary over and over again. But it has been relief in these bond markets. And again, maybe that comes back to the fact we expected really aggressive day one action for Trump. Maybe that was overblown. We haven't gotten it yet.
But Stephen Shaw, just one example of not convinced that you can assess the whole, not first 100 days, but this is day 3. You cannot step back and say, oh, it's gradualism of 10% on China, Europe, you're in my sight line, because the risk is this. It could be like death of 1,000 cuts. You start at 10%. Yes, it's gradualism, but it's, you know, where's the end of that journey? And what have you got to do to get off the runway, which President Trump is firmly at the bottom of the runway with a hand on that throttle.
Wow, the metaphors are just
imagery this morning.
Really good this morning. I thought Seema Shah was also really brilliant on Europe. Everyone's been talking about this idea that the bar is so low, and that's part of what we've gotten. We've gotten a rally in Europe that's taken us to a new record in the Europe Stock 600. The bar is low for a reason. Growth looks poor there, and again, Trump yesterday saying Europe treats us very badly. They are in my sight for tariffs.
And this comes down to positioning. The market is not positioned for this long move in the bonds. That's an underweight position, so very few people have got that tailwind. And in terms of Europe, they flipped from net short over to long, but for how long will that endure? I mean, that's a minuscule move, but it just shows you that there's a shift in the intention.
And again, what comes from the White House might be the thing that determines this. It is day 2 of President Trump's second term in office. He has continued to issue tariff threats, nothing concrete yet, but speaking at a White House event, the president put China and Europe this time in his crosshairs.
We're talking about a tariff of 10% on China based on the fact that they're sending fentanyl to Mexico and Canada.
Joining us now is Bloomberg's Megan Crane in Washington, D.C., a very cold and snowy Washington, D.C. Megan, great to see you this morning. 10% tariffs on China. We had heard a campaigning President-elect Trump talk about as much as 60%. What do we make of the new numbers being thrown around?
Good morning. Yeah, so the numbers are unclear. A lot of what Donald Trump says is sort of putting ideas out there and floating balloons as to what will sort of get the momentum in the way that he wants it to be. None of his executive orders yet have actually imposed any tariffs. He requested a review that isn't actually due until April 1st. So that's actually quite a lot of time for him to throw out different numbers and sort of see how people react, how countries react and markets react.
Well, the other big issue is, of course, immigration. The troops have been deployed to the border. Immigration raids already having some consequences in New York, LA, and Chicago. What are we actually seeing on the ground?
Right. So there hasn't been a lot of raids that we have seen. Our immigration reporter told me yesterday that we would expect to see them in the morning. Just sort of that's the practice. And we don't have footage of that from yesterday, so it could happen again today. It seems like one of those things that the Trump administration is focused on threats, and that is working, right? People are staying home and not working and not going into immigrant-heavy neighborhoods in Chicago, Los Angeles, like you talked about. We do have, we have reporting that shows that people are afraid.
Yeah, and again, this is one of the big macro risks, too, of do you actually have people, mass deportations out of this country, and what does that do to the labor market? Megan, elsewhere, TikTok ever present in the president's talk, and he's continued about talking about TikTok, this idea of he wants at least 50% owned by the U.S. The groups emerging are kind of interesting. Musk, Larry Ellison, Mr. Beast, Pam Bondi's brother. I honestly, I don't know what to make of it. I mean, how is this sort of evolving? And is China really okay with these types of groups being the one to buy operations from ByteDance?
Yeah, I mean, that's a really great question, right? I mean, as far as I understand, they're still saying that TikTok's not for sale. So, how that's going to play out and who ends up winning that, battle, it looks like, in order to keep operating in the States, they'll have to find some new management. And whether it's Mr. Beast or a different, tech entrepreneur, Musk would face, monopoly problems, having already owning Twitter, so that now X, so that it's one of those many things in the Trump administration that's just unclear how it's going to move going forward.
Well, there's certainly an interesting beauty parade of bidders in the wings. Megan, thank you very much. Megan Crane in Washington. It is Davos. Let's get back to the hillside. Bloomberg's Francine Lecoq is speaking now with a panel about whether financial systems can withstand the next crisis. Let's listen in.
The financial system has been fairly resilient, has proven to be fairly resilient. There's a little bit of unfinished business, I think, in the non-bank sphere, but at least the banks as core of the financial system have weathered the recent turmoil quite well. And I mentioned that point because also in terms of thinking about future shocks, I would emphasize more the resilience part than trying to predict where the shock is going to come from. We live in a world of fundamental uncertainty, Knightian uncertainty, Raghu would probably say, coming from Chicago. But that means that we financial regulators and also bank risk managements, they like, of course, much more quantitative risk distribution with a given set of shocks where you assign probabilities. Unfortunately, that is not what has created most havoc in the financial system. These were more forms of unpredictable uncertainties, unknown unknowns, as you wish. And given that that is so difficult, I think our emphasis should be, and continue to be, building resilience within the system, even if you don't know where exactly the shock will be coming from. There are enough things to worry about. Geoeconomic, geopolitical fragmentation in and of itself may have disruptive consequences on financial markets, may have some impact on our capacity to work together internationally if there is a problem popping up somewhere in the financial system. new technologies of which which are very promising, I think, in terms of their business opportunities, but which may also contain additional forms of interconnectedness in the financial system over and above the traditional forms of interconnectedness. Well, a little bit of that.
Yeah, there's a lot of uncertainty out there, right? And I take your point, Professor Rajan, to what Governor Knot is saying, that actually we've been very bad at predicting any kind of financial crisis. But if we try and see what the hotspots of tomorrow could be, where's the uncertainty?
So I think I agree entirely with Klaus. We can't predict, but we can try and make sure the system is resilient. And so look at the system and see where the weak spots might be building up. I think whenever you look at a financial system, you talk about two things with great importance. One is solvency, which also means leverage. And the second is liquidity. I think we understand solvency reasonably well. It's the liquidity part, which is something which is behind the scenes, which is part of the plumbing. And what we're seeing increasingly, especially with what is happening with the greater focus on U.S. markets, U.S. markets now 65% of global equity markets, but lots of capital flows, maybe with the deregulation even more going into the U.S. The center of liquidity is the Federal Reserve. And you have to ask, is the Federal Reserve going to step up every time there is a problem? Look at what's already happened. We saw in the global financial crisis, the Federal Reserve balance sheet went from 50 billion to 2.8 trillion, okay? Then it came down, but it couldn't come down all the way. At 1.5 trillion, it backed up again in September 2019. Fed came back in. Again, it started trying to reduce its balance sheet. It backed up this time in March 2023 at 3 trillion. The question is, the Fed is supporting the US system, but now increasingly it's going to support a global system. And the question is, what are the gaps? Can it bridge the gaps? So think, for example, what happened in March 2023. It could not support, the system itself could not support the small and medium banks. The Fed had to come in to support them directly. What about internationally? What about stable coins? Are they going to be in the system or out of the system? Who's going to support them? These are the kinds of things we need to examine going forward, because this is where the problems might arise.
Right. Susan?
I want to bring two additional perspectives to the discussion. The first is going back to your point on the events of March 2023. One of the unintended consequences of those events was small businesses, because two things were true about small business. One was liquidity was concentrated in the big banks, and the second was that as a result of that concentration, many of those small businesses were single-threaded. They literally couldn't make payroll, they couldn't get supply chain payments, and they couldn't get to consumers. So as we think more about what happens to build resilience, that constituent needs to be thought of in the same way as we think about many of the underserved communities. The second point on resilience is, for me, what I remain optimistic about, and I agree, predicting the next shock is hard. But here's what we've seen if you go back in time. We've seen that anytime there is friction, friction is the path to innovation. And if you look at the innovations that have come from financial constraints, open banking is a great example. The fact that half the world now moves digital money in a wallet of some sort, again brought by financial constraints, because so many digital wallets come from local payment systems. They're not interoperable globally, but that allows people to transact digitally. And if you build onto that, where we are with Gen AI, and the things that have advanced very important things to financial systems, especially in commerce, which is understanding the identity of both the seller and the buyer, there is so much innovation that has come from constraint. Now, is that enough? No, but it certainly forebodes that as the world gets more unstable, we're likely to see more innovation.
Lim Cho-Kiat, do you worry that actually in this America First policy, the rest of the world will have to figure out by themselves financial stability, how to support markets and liquidity?
Right. Well, fracturing risk is certainly a big one. But maybe I could just offer two angles. First, just look at what happened over the last couple of years, which we have experienced very stable financial system, right? I think it's largely due to the starting conditions. That credit cycle was benign. As we entered, let's say 5 years ago, even with the COVID, And you got a lot of fiscal support through that period. And I would also give credit to central banks for arresting the spiking inflation. And then going forward, the way we looked at it, the angle is that there are three things that you want to be careful about. First is to be clear about the fragilities in the system. I mean, these are things like illiquidity, leverage, and concentration. That's the first thing. The second, of course, is negative shock. Hard to predict, right? But you could imagine things like credit cycle turning down. There's a little bit of sign of that now, with the fiscal money running out. You could imagine a recession down the road. That's the negative.
We're just hearing there from the GIC CEO, the Singaporean Sovereign Wealth Fund, Lim Chow Kiat, one of many panelists on Bloomberg's Francine Lacqua's panel, speaking about the potential for another financial crisis. If you want to catch the rest of that panel, including Klaus Connaught and Sergio Amati and others, live Go on your terminal is where you want to head. Coming up, we head back to the Swiss Alps, our live interview with the chair of the State Bank of India. That's coming up next on Bloomberg Brief.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
One of the very critical things is that a lot of young entrepreneurs don't realize is that when you start as an entrepreneur, you're not just building your business, which of course you are, but you're also building your organization. And most people don't realize that. And building an organization is not just about hiring people. It's about the culture, it's about the systems, the values, the mission. It's about how you operate, how you do things, how you retain people, how you keep them motivated. So it's all of those things put together. And over time, you realize that, a lot of effort has to go into it. And then eventually you have an organization that has a life of its own. It's, and it's sometimes you look at it and you marvel and you think about, how was this created? And was I the person that was behind getting this thing done?
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything.
Good morning. You're watching Bloomberg Brief. Let's head back to the World Economic Forum, where Bloomberg's Haslinda Aman is sitting down with the chairman of the State Bank of India. Haz, over to you.
And Danny, the State Bank of India is the largest lender in the country. Its results are a bellwether for India's economy. Thank you so much for joining us, Mr. Sethi. We're talking about an economy that's slowed down from about 8% to about 6% and change. Is that a blip, or is the economy about to pick up again?
First of all, thanks for having me on this show. Among the major economies, India continues to be a good story. And my personal view and our house view is that whatever witnessed in the last 2 quarters would be a blip. The long-term story of Indian economy is intact. And I think the current financial year, of course, the growth rate advanced estimate places around 6.4 to 6.5%. It is obviously the country is looking for higher growth rates, but when you juxtapose it against, and the global economic backdrop of 3.2% growth rate, it still is a significant growth rate in our view.
Well, the thing is, consumption remains lackluster, both urban and rural. How is that impacting your strategy, especially your retail portfolio?
The retail portfolio is still doing well. In the overall banking industry in India, one thing, the rural-urban consumption is the division between rural-urban consumption is going away. That's a good part, right? So the rural consumption is increasing, while the growth rates could be temporarily, slowed down. The important element to note is that the rural and urban consumption almost converging in terms of the levels of consumption. It's a good story. As far as the retail personal loans is concerned, obviously there was some concern about unsecured personal loans, which is slowing down. It's reaching a comfort zone for the regulator. But the home loans is a good story in India. And we see that among the personal loans, the home loan are having a robust growth rate. And the credit growth broadly would be stabilizing around 12 to 13% is our estimate for the banking industry.
Let's talk about risk. Do you see risk coming from the second Trump administration? We know that there are issues when it comes to tech, for instance. India's economy might be impacted. Might that have trickle-down effect? And add to that, of course, we have the Indian rupee trading at close to record lows.
So obviously, the yield movement in the developed economies had resulted in outward flows, which is definitely putting pressure on the central bank in India to relook at, what should be the rate cut in the ensuing February monetary policy. Our assessment is that probably they may have to take a call on the rate cut. This would stem the flows, hopefully, and help the market to... if you have noticed that, despite strong outflows on the FPI side, the domestic inflows are significant in India now. While the market is impacted by, many decisions with the change of presidency in the US, there is some uncertainty in terms of how it is going to impact India. Our assessment is that there are a lot of things India is getting it right, in the sense that, we have diversified our export base and diversified both in terms of the products, in terms of the markets, which means that even if there is unlikely event of any tariff action against India, I don't think India is going to be impacted badly. But we need to be watchful what is going to happen in case of any tariff on the China is imposed and what happens to the Chinese production getting diverted to other countries.
The caution is the word. Mr. Sethi, we thank you so much for your time.
Right.
C.S. Sethi there, joining us here in Davos. Of course, he's chair of the State Bank of India. Manis, handing it back to you.
Haslinda, thank you very much. Great to see Haslinda Aman there in Davos. Coming up, earnings and a treasury auction for you, all on deck. Context Matters on Bloomberg.
everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have Take-Two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Bloomberg brings you breaking news 24 hours a day. Powered by 2,900 journalists and analysts in more than 150 offices across the globe. Bloomberg Television. Context changes everything.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Rio de Janeiro, Brazil, and this is Bloomberg.
It's your Bloomberg Brief with Danny Berger and Manish Cranny in New York. Let's get you set up for your trading day on this Wednesday. We're going to get some earnings. Those include Johnson & Johnson and Procter & Gamble. Both of those will hit before the bell. 10 a.m. Eastern, ECB President Lagarde will be speaking at Davos. Plus, we are going to get a Treasury auction, $13 billion in what's usually a kind of unloved 20-year bills. That auction will come at 1 p.m. Manis, what you got for those stocks?
Danny, let's kick it off with Netflix. They're extending their rally after posting a record in the fourth quarter and raising prices. Did you watch Squid Game? We can have that conversation in a moment. United Airlines up 3.64%, a comfortable beat on the earnings, and they see profit rebound as the airlines buck those winter doldrums. Orica, I mean, what an amazing performance. Larry Ellison, talk about connection to power. This is joining up with SoftBank and OpenAI in a pact to deliver AI for the future for America. It starts at $100 billion and scales up potentially to $500 billion. Danny.
And let us not forget that Larry Ellison is also one of the names being floated as someone who might be a person that buys a stake in TikTok. It does go to the story of proximity to power, what it's meant for some of these tech names. And we've kind of joked on the show before, talking to different investors, saying, do you want to kind of look at the dais behind Trump and see what executives are and buy their stock? It kind of has been a strategy that has worked thus far.
Look, absolutely. I mean, this mission, this new AI mission is called Stargate. And the question is, what does it do to U.S. exceptionalism in the AI space? Or is it another major balloon of policy that maybe doesn't fully manifest itself? We saw that a couple of times before, but this sounds pretty real with serious intent and serious money from Mayoshi-san in terms of being responsible. And then you got all the chip makers, boom, boom, boom as well. ARM, Microsoft, and NVIDIA. Sorry, not Microsoft, NVIDIA. All trading higher this morning.
Look, it also goes back to kind of what we've been hearing in Davos, the enthusiasm from all these different banks saying that we're going to get bigger, that the environment is really good. But this is the thing, it is just the animal spirits at this moment. It is just announcements at this moment. You need to see actually what the follow-through is and make sure that that follow-through isn't also met by tariffs and inflation. It's two different sides to the same coin.
It also depends. I mean, at the moment, it's incremental and gradual tariffs, 10% for China. Europe, you've been very, very bad. We don't quite know what we're going to lobby at you, but you've been very, very bad. And the question is it a death of 1,000 cuts that the Fed has got to consider or something much more significant? And that's the conversation in Davos from Norsebank. They're worried about the bond market blowing out.
Well, that's it for us. Surveillance is live in Davos. They will take it from here.
what legacy I would love to leave is to make sure that in my village I have infrastructure. So long when I'm gone, things are still working. Then I have done my job. And if some people get inspired through my work and then try to engage themselves for their community and create something that is inspiring for everyone, I will be happy.
What's the best piece of advice you would give to someone young who wants to make a difference actually in this world? In architecture or with something else?
Wow, I'm not the right one to just do that.
I think you are.
Yeah, but with the pressure you have, and then you try to be the good one, the fancy guy, the intellectual one, I have no advice than to believe in yourself and really work hard. You know, when I started, no one would have imagined that I will be able to see my name connected with Aga Khan or Pritzker or sitting at Bloomberg to talk about sustainability, about future of sales. No, myself 5 years ago, if you told me that, I will say no. I will never imagine. So I will encourage everyone to believe in what you're doing and not try to run after the newest of the newest. Just be consistent. Just work on things that matters for you. Really, at the long term, it pays.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
I think the inaugural speech was essentially an advertisement for investing in America.
The U.S. is at the epicenter of all discussions.
The U.S. labor market has been the most resilient labor market in the world.
I don't see a lot of merit in drill, baby, drill. I see a lot of merit in build, baby, build.
I think we're going to ultimately have to see what the year brings because there's still more unknowns than knowns in the equation at this point.
This is Bloomberg Surveillance, live from Davos, with Jonathan Farrow and Lisa Abramowitz.
Live from Davos, Switzerland this morning. Good morning for our audience worldwide. It's day 3 in Davos, Switzerland at the World Economic Forum. Once again, equity futures doing okay. Over in Europe, all-time highs on the Stock 600, which is quite remarkable given the diplomacy we're seeing coming out of Washington, D.C. Europe could be getting some tariffs. China might be getting 10%. Lisa, this changes from one day to the next.
The rhetoric, though, has softened. At least that is the perception. And right now, people are looking for areas that aren't overbid. That is why you are hearing an increasing number of corporate executives, of bankers saying there is renewed interest in Europe just because the bar is so low for success.
It's go time. Mary Erdos, JP Morgan Asset Management and Wealth Management. What did we hear from Brian Moynihan of Bank of America yesterday? There's some optimism out there. There's tons of optimism here in Davos, Switzerland, but we need to be really specific as we were yesterday. There's tons of optimism from American executives. From everybody else, Lisa, there's still a big question mark.
There's still a big question mark for everyone here, and that is to be clear. In public conversations, there's a lot of optimism. There's a bit more skepticism in private conversations about tariffs, exactly how they will be implemented and which regions are going to be affected most. And then honestly, just about interest rates and the debt and sort of a question, an existential question about whether we are entering a new, more inflationary time and how much that could potentially stymie some of the optimism. But on the surface, happy valley.
Anne-Marie is not happy. She doesn't sleep anymore. She lives in Washington, D.C. She's moved. She's never coming back. Anne-Marie stuck in the nation's capital following every single headline that comes from the president, Donald Trump. Anne-Marie, another news conference. I think we've heard more from this president in 2 days, speaking to reporters, than we heard from Joe Biden in the last year.
Well, it's certainly close, given the fact that this president held a off-the-cuff news conference on his first day of office behind the Resolute desk. And then yesterday, when he was announcing this AI initiative flanked by some executives, including Sam Altman, he then started riffing once again with the press, taking questions. And that's where we heard more about tariffs. And this is what is keeping financial markets and investors on edge. Day 1 of the office, he went after Mexico and Canada. Day 2, he was back talking about China. Take a listen.
We're talking about a tariff of 10% on China. Other countries are big abusers also. You know, it's not just China. China's an abuser, but the European Union is very, very bad to us.
So tomorrow you may hear more about the European Union when Donald Trump is set to address the World Economic Forum that's taking place where you guys are in Davos, Switzerland. When it comes to China, though, what's so interesting is Donald Trump talked about 60% tariffs on the campaign trail. So potentially this isn't tariff man back. Potentially this is Donald Trump, the negotiator, the deal man is back. He's talking about now 10%. One thing we do know, there has been no executive order on tariffs specifically. There's just been an executive order on making sure there's a review on unfair trade practices. Basically, Donald Trump is putting in place the pretext for him to go after some of these countries with that review. Now, day one, he said February 1st, but in the text, it's April 1st. So I guess the next few weeks, it's going to be quite volatile.
It could be very volatile, as we have seen in foreign exchange over the past 2 days. Anne-Marie, appreciate your time. We'll catch up with AMH in about 30 minutes' time. Just to confirm, she is coming back. She will be back in New York next week, I believe. But there's going to be plenty of visits to Washington, D.C.
And we'll be back in New York, too. And I do think it's interesting that Donald Trump is going to be speaking to Happy Valley, or a lot of people are paying attention to him. He's giving them some love, maybe.
I'm not sure how happy Happy Valley will be after that address. Joining us now, a happy man, Daniel Pinto, J.P. Morgan Chase president. Daniel, it's good to see you, sir.
Thank you for inviting me. It's great to be here.
Do you feel happy? Do you feel lighter now you know you're stepping down and retiring?
I do a bit. I've been in the company for more than 40 years. I add my contribution to the success of the company. The company is in an amazing place at the moment, and it's the right time to embrace the next generation, to work with Jamie and prepare the company for the future and his succession. So I feel good about the opportunities this company gave me, my contribution, and looking forward to a better balanced life going forward.
You are living the life that we all aspire to. Why now? And what do you expect the next 12 to 18 months to look like?
So it's very simple. This is being planned for a long period of time. And now is the time for me to transition in a very, very smooth way. This transition will go over a couple of years. My job will be to help the management team to continue advising Jamie and the board in issues that are strategic and important for JP Morgan and for the future of the company. So it is the right time. It is the right group that I helped Jamie to build up to. So I think that I feel good about where the company is and where I am now.
You've been at JP Morgan and its affiliate banks for 4 decades.
Yes.
It's a long time. You've been to a lot of Davoses. You've seen a lot of different cycles of enthusiasm. How enthusiastic is the optimism around the deal making and some of the mergers and acquisitions that could come down the pike?
I think that is quite enthusiastic. 24 was a very good year too. So you think about M&A, the historical average of volume is around 4 trillion a year. In 2023, it was around 3.2, last year 3.5. We think that this year could get to around 4 trillion, which is historical average. And most important, we hope that the timing, particularly in the US, to approve transactions is not as long. It's moved from 6 months in the past to around 18 months. Hopefully we could go back. It's not just to announce new deals, also to close new deals. And the environment is set for that.
Well, let's talk about the environment. Is it just the regulatory shift that we need, or do you find that 4%, 5% interest rates have held people back as well?
I think that if you think about the U.S. economy, has grown very well in 24, over 3%. It's likely to grow over 2% this year. So the environment is good. I think that even that is an economy that you don't see imbalances that tell you that it's an economy that is about to go into recession. This cycle could continue for a period of time. There is plenty of monetization that needs to be done in the sponsor space. There is essentially the valuations in the U.S. that are much higher than any other places. It's also incentivizing merging into U.S. companies. So I think that it will be a good environment.
We spoke to one banker yesterday who suggested that maybe these US companies could go on a bit of a shopping spree in places like Europe where valuations were depressed. Are you engaged in any active conversations right now in companies looking to do those kind of things?
So we are always engaged with clients all over the world, and there is a lot of optimism everywhere about what the U.S. could do. So therefore, yes, there is dialogue everywhere.
So everyone sounds very optimistic, and then you go to some of these soirees in the evening, And people say there's a lot of enthusiasm. What actually will get done? We're less clear on, just simply because there is that question mark, to John's point, about benchmark rates, about the fact that the economy isn't slowing down so much. So why would they go any lower? And what happens if they go higher still because of debt and deficit?
I tell you how I think about it. When you think about the U.S. economy, it's in a good place. There are no imbalances. Consumer is in a good place. The corporate sector is in a good place. Inflation hasn't yet got to the levels that it should be, and the deficit is high. And then you have policies coming from immigration policies, tariffs, fiscal policies, and others. So at the end, this government is about growth. So therefore, I hope they will balance the implementation of those policies in a way that it doesn't either overheat the economy or triggers a recession. So I think that the hope is because of that, because the economy is in a good place, and certain things like rational regulation, I don't like to talk about deregulation, rational regulation in our sector, in any other sector, could be good for growth. But if things go too far, then the Fed may have to hike rates and deal with inflation. Hopefully it doesn't happen.
I guess that what I'm getting at, some people are asking, what could potentially derail this optimism? Is there anything that you could see derailing this optimism this year at a time when people are basically counting on this sort of rational regulation or some of the other pro-growth measures?
To an extent is what I said, like inflation could be. That economy goes a bit too fast and doesn't allow inflation to come down. The geopolitical space is still in a challenging place, though there is some signs of potential improvement there. And at the end is like any other policy. You can do the right amount, you can do too much or too little. Hopefully the right amount is done in a way that doesn't derail an economy that is not ready for a recession. It's an economy that is ready to continue to grow at a decent pace.
Daniel, a lot's changed in your banking career. A tremendous amount. And now a bunch of alternative asset managers are looking for the activity that traditionally was on a bank balance sheet. Can you walk us through, as you depart, how different banking might look in the years ahead compared to when you first started?
Well, it's very different. I think that is in a better place with more scale, better quality of service, a better quality of products, and a safer industry that probably has ever been. I think that if you're referring to private credit, I think that banks, we've been lending for 200 years, and private credit is no more than a normal loan. So I think that we feel very good and where we are in order to compete in that space. And at the end, so what is our objective? To be able to provide the best possible service to a client. So therefore, what is it? Is in a certain transaction, you will be able to offer a syndicated facility, or you will be able to offer a direct lending facility. Both markets will tend to converge some way or the other, and we are in an amazing position to compete because we do have relationship with all those clients, and we offer to them not just the loan, we offer to them a bunch of activities.
We saw a relationship develop between Mark Rowan's Apollo and Jane Fraser's Citi, announced at the end of last year. Are you exploring similar partnerships?
We have plenty of partnerships, several, where we have co-lending facilities with other asset managers and that they want to participate in the origination. The issue for all these funds at the moment is that they are getting a huge amount of inflows and there may not be enough assets to deploy. So therefore, to have a partnership with someone like us or Citi or any other to be able to participate in the origination of these banks is a good thing. We are doing the same, not just with one, with as many as we can.
That kind of dynamic gets people worried. Not to be negative Nelly here, but you know, I'm going to the worries. But going forward, I realize that I'm sounding pretty negative, but I'm wondering, given how much the flows have come in to the private credit sphere and how they've been searching for ways to be deployed, is there anything that makes you nervous within this ecosystem that's grown up very quickly?
At the moment, no. I think that when you look at these funds, they don't have too much leverage. Their leverage 1.5 times. So from that point of view, particularly in the bigger space, bigger loans, not so much. The only thing that made me pause and think about it, is there is a lot of direct lending going into small business. There is a lot of direct lending going into the smaller side of middle market. And this industry, in the current form, hasn't been tested through a downturn cycle. Because when COVID happened, it was all subsidized by the different governments. So how these funds are going to behave in a downturn with small business is something that you want to be concerned about it, you want to keep an eye on. But I don't think that there is a systemic issue in this space in the short term. The components are not there for that to happen.
Daniel, final question. How's the golf game?
It's okay.
What are we down to?
It's been deteriorating and hopefully will improve.
What's the handicap now?
It has gone from 5 to 8.
5 to 8.
Hopefully I go back
to
to 5.
Dan, you've got some time to do it now. Daniel, appreciate your time, sir.
No,
and congratulations on a fantastic career.
Thank you very much.
Thank you. And looking forward to covering the next 12 months with you too.
Absolutely.
Thank you, sir. It's Daniel Pinto there, the president of JP Morgan Chase. Let's give an update on stories elsewhere this morning with your Bloomberg brief. Let's cross over to Danny Berger. Hey, Danny.
Hey, John. President Donald Trump says that he is likely to impose sanctions on Russia if Vladimir Putin doesn't come to the table to negotiate on Ukraine. On Monday, Putin said that Russia was ready for talks with the U.S., emphasizing the need for a long-term peace plan based on respect for all nations' interests. Trump said during his campaign that he could end the conflict in one day once back in office. Netflix shares are soaring in the pre-market session, more than 15.5%. The streaming giant added 18.9 million subscribers in the fourth quarter. That's easily its biggest quarterly subscriber gain in its history. That was thanks in part to live sports and the return of Squid Game. Netflix also announced that it's raising the price for its popular U.S. plan by $2.50 for a total of $17.99 a month. It's also increasing the cost of its cheaper ad-supported plan. On the other side of things, Apple has lost its crown as the world's most valuable company after closing at its lowest price since November yesterday. That drop erased more than $110 billion of market value, sending it below that of chip giant NVIDIA. Apple was hit by 2 broker downgrades as well, pointing to weak sales in China and tepid consumer interest in its smartphone AI. And that's your brief. John.
Hey, Danny, thank you. More from Danny in about 30 minutes' time. I'm next on a program cutting the red tape.
Our medium, small-sized businesses, their biggest complaint last time I was here, and we talked to the administration about it, was the biggest complaint was, you're in my pocket, you're slowing me down, I can't get things done.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Stocks are doing pretty well. Stateside equity futures up by 0.5% on the S&P 500. Even better in Europe on the Stock 600. All-time highs, Elisa, a little bit earlier in the session, which is amazing, given some of the headlines we saw overnight.
Yeah, although less amazing when you hear all of the conversations that we've been having here about people looking potentially to Europe for an opportunity at a time where essentially if it's cheap, it's better simply because people are worried about overvaluation.
Under surveillance this morning, cutting the red tape.
Our medium, small-sized businesses, their biggest complaint last time I was here, and we talked to the administration about it, was the biggest complaint was, you're in my pocket, you're slowing me down, I can't get things done, I want a permit to do something, it takes forever, I want your labor rules, all this stuff was going on just over and over. And small, medium-sized business don't have the thousands of people that big companies had to figure it all out. Over the last, say, 6-8 months or so, that it went from regulation and inflation. Inflation's kind of come down as their worry right now. And what's actually interesting is they're going back to labor shortages.
There is a really strongly held view from U.S. executives that things are about to get a whole lot better. Joining us now to discuss is the Guggenheim CIO, Ann Walsh. Ann, it's good to see you.
Good morning.
Welcome to the studio. Let's talk about it. The salespeople running around Davos trying to sell, saying things are really good in America right now and they could get even better. You've got to put money to work, and we're already priced for a lot of that. How challenging is it for you and the team?
Well, it is an interesting time. You've got rates that are range-bound. The 10-year trading between, we'll call it 375 and 475. You have credit spreads that are tight relative to history. And you have stocks that are stretched in valuation relative to expectations and at a risk premium that is less than zero. So it can be very tricky at this particular juncture. But fundamentals remain pretty strong. And so there's opportunity for investment in maybe a wide array of selections and sectors. So there's things to invest in.
I remember this sort of pendulum switching from bonds to stocks, people saying that stocks really seem like the dynamic place to be in a pro-growth administration at a time where inflation hasn't completely gone down. Do you agree with that, that stocks are preferable to bonds at a time where really growth is the main theme?
Well, I think that does give a lift to stocks. And as long as earnings per share projections turn out to be accurate, I think that there's still room for opportunity in equities. However, we also have to remember that not all markets are exactly the same. So if you look at the Russell 2000, you still have a very high percentage, around 40%, that are non-earners. And the Mag 7, of course, is well below risk premium levels that we've seen not since the late 1990s, where we had negative risk premiums. So I think that we have some risk associated with the market, that it is priced for perfection. So I would be cautious, but cautiously optimistic. And as long as, and we still see earnings per share rising, maybe not at the level that is priced into the S&P right now at 15% earnings per share growth, but nonetheless, still a fairly positive environment.
Stocks are priced to perfection, in your view. Are bonds priced to perfection?
No, actually, I think there's some real opportunities in fixed income still. We have a risk premium that's positive relative to, certainly relative to equities. And also you're getting a real rate of return that is much better than we had pre-COVID. And you're getting a nominal rate of return in any number of areas that make a lot of sense. So we like all sorts of credit stories, structured credit, corporate credit, even high yield, and particularly the high quality portion of the high yield market. So there's still some real fundamental value that can be found in fixed income.
Can you say the same thing about treasuries?
Well, like I said, we're range-bound in treasuries, and there's a trade that's actionable there as we go up towards the top end of the range, in the high fours, if you will, 475. You can extend duration. You can then also, as we move back, shorten. After all, we saw a 120 basis point rise in the 10-year, and we were able to play that trajectory really quite nimbly, if you will, during that window of time.
The incoming government might have to look at extending duration as well. Will that complicate things? How do you think about the deficit concerns of the moment? And do you think that's been responsible for the pickup in yields we've seen through December and into the new year?
I think there's a couple things that have really influenced the rise in rates. One is the deficit, and it's a real concern. who's going to buy all these bonds that we have to issue in the U.S.? Right now, we're still being able to be financed through both U.S. investors as well as international investors. So that story is still playing out pretty well. But at the same time, you also have a Fed that is sending mixed signals with regard to the rate trajectory. Now, our belief is that rates are still going to be moving down over the course of 2025, and we're going to move towards a neutral rate. And I think it's going to be tricky for the Fed to really find that perfect neutral rate. But at the same time, they are also still slowly reducing their balance sheet. So they're sending mixed messages, and they're also acting in mixed ways.
You know, John alluded to this idea that the U.S. has to finance all of this, and you were mentioning this, right? Where's the money going to actually come from? And we've talked about how that sucking sound of cash going into the United States to try to fuel this, crowding out some of the debt issuance and other assets in other regions. How destabilizing is it to have one economy accelerating so quickly and diverging from the rest of the world?
Well, it is unusual. But what I would also say is that because the strength of the U.S. economy has definitely been there, we continue to see an inflow of capital, and I think we're going to continue to see that. And the opportunity for investment is going to go beyond the markets necessarily and into infrastructure investment, manufacturing build-out, real estate.
For the U.S.
For the U.S.
But not for the rest of the world.
But not for the rest of the world so much. And so there's going to have to be some real balance there. But for the meantime, the U.S. is going to continue to attract capital.
Can we get you excited about Europe in any way, shape or form? We're sitting here in Switzerland.
It's beautiful.
It's beautiful. A lot of people say it's a great place for a vacation. I've always been told that by US-based investors. Can we get you excited about Europe at all?
I think that Europe has some real opportunity, but they have to really make some structural changes. And we'll see if Europe's able to do that. One of the areas of maybe concern or caution is that previously very stable governments are seeing some turmoil. France, Germany, elections coming up. And so I think that as we come through those and we see more evidence of the trajectory, and if we see a real desire for Europe to engage in structural reforms, then I think we might be able to see an investable opportunity.
There's a lot to fix, and I appreciate your time. As always, it's good to see you. Anne Walsh there, the Guggenheim CIO. It's amazing how downbeat a lot of people are on Europe, and for good reason. We could sit here and list the reasons, but we'd run out of time. And at the same time, you've got an equity market in Europe today that's at all-time highs on a stock 600.
How many of those companies, though, that are making all-time highs are related to U.S. sales that are actually doing better because they are hitching their line to the wagon that is the United States of America and the growth there? And that, to me, is really this big question. How much is it U.S. wrapped in European basket and looking pretty good?
Yeah, I think we got a read on that from Richmond last week, didn't we?
Yeah.
Wasn't that all just U.S.? It's picking up, it's doing better.
Remember when that was the China story? China consumer is buying everything. Now it's the wealthy U.S. consumer.
Gearing up to go on vacation this summer, no doubt. Spend a lot of money, right, across the continent.
Well, speak for yourself.
With euro-dollar around 104.
Yes, I hear that, though.
Coming up, Dave Mackay, the RBC CEO, to explore the tension that's emerging north of the border between Canada and the United States. That's next.
is the Vivian Tom clientele?
Yeah, power women, like the dragon. Dragon women. They're lawyers, they're CEOs, they're all important decision makers, women in the world.
Why do you position your products for this group of women?
When I started, designing, I always want to do something that is empower women.
When you take a look at your store, there is something for everyone. Take a look at the T-shirt, for example.
My customer growing, like 30 years already, so they become more powerful. I also want to grow my Gen Z audience too, They are like in the 20s, so it's a more affordable price for them. And then, my powerful women's daughter wearing their mom's dresses, and they feel that the power, the energy. So now they come back to the store and they buy more.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Doesn't always happen.
Equity futures near session highs on the S&P 500. A little bit of a lift on both sides of the Atlantic through the session so far. The Stock 600 at all-time highs. The equity benchmark in the United States, in New York, the S&P 500 positive by 0.4%. Check out the Nasdaq up by 0.9%. This bond market has really settled down over the past few days. Let's get you some morning movers. We can cross over to Manus Cranny for more. Good morning, Manus.
Jonathan, good morning to you in Davos. Were you one of the 19 million people that signed up for a new Netflix account in the fourth quarter? This is what you call velocity. Not only did that beat by nearly 50%, in other words, double the estimate, but you're paying more. Price rises as well to come through at Netflix in US, Canada, Portugal, Argentina. That's what you call elasticity of pricing. Was it Squid Games? Was it Carry On? Or was it the live football on Christmas Day that drew in the crowds? And this is where Netflix is going. It's more about the live event and will you spend extra. They are going to spend $18 billion on content this year, up from $17 billion last year. That is a vacuum cleaner being switched on in terms of competition for content. Roll it over, have a look at Oracle. This is the personification not just of a deal in AI, which is called Stargate, which President Trump announced yesterday, which is a trifecta between SoftBank, Mayoshi-san, along with Larry Ellison at Oracle, and Sam Altman. But it's about access to the deal, access to power, access to being in the room. And access means everything, whether it's the AI deal or indeed being one of the protagonists that could get your hands on TikTok USA. That's what you call access to power, and $48 billion of market cap that has been added to this company in the past 24 hours. We're up 10% at one juncture. I'm rounding. United Air. This will chime for yourself and Lisa. Premium international travel. International transatlantic travel is the core component of the beat here. 20% of their revenue comes from that transatlantic lineup, Jonathan. Profits up 24% in the last year, and they're guiding for a good first quarter, 75 cents to $1.25. Jonathan.
Manus Cranny, thank you, sir. Squid Games, you watch it?
My kids did.
Did they?
Yeah.
They
I don't
like
know
that?
if that's... Yeah.
It's
they
pretty
didn't
dark, isn't it, Brammer?
Well, what do you expect?
On brand.
For my children.
I've never watched Squid Games. We'll try and work that out.
They thought the first one was better.
Okay. And this got worse?
They just
because
thought
it got darker?
No, actually, it's just a little bit more formulaic, but...
It lost the shock value?
Yeah, I guess so. Yeah, thank you for
Good chat.
defining it.
Netflix is high. Let's head over to Anne-Marie to get some more in Washington, D.C. Anne-Marie, what's happening?
Well, what's happening is that trade is really starting to become the focus in Washington, D.C. After we heard from President Donald Trump yesterday, day 2 of his administration yesterday, focusing again on tariffs when asked by reporters what really is going to be the tactic. Because remember, on the campaign trail, he said day 1, the walls are going up. What we've seen now is a little bit more of a negotiating tactic. And what we've seen from the likes of whether it's China, Canada, or Mexico, these leaders are starting to talk about what their plans are to really combat what's coming out of this White House. So we heard from Prime Minister Justin Trudeau of Canada yesterday saying that this is what Trump likes to do. He's a, quote, skilled negotiator wants to keep you a little bit of off balance, and that what Trudeau says is that the Canadian government really has a plethora of what they can do to combat these tariffs. So if the United States comes in at something a little bit lower and not as grand, then they can also come back a tit for tat, dollar for dollar. If the United States goes to, say, 25% on Canadian imports and tariffs on that much, they're looking at potentially maybe aluminum. So we do see U.S. trading partners preparing for Trump 2.0, given the fact that we haven't got exactly what he's going to do on tariffs. We do know that he wants to have a review until April 1st. I like what the Mexican president said. She said, you know what, we all need to take a deep breath and keep our heads cool when dealing with this new administration and this new world.
We'll take a deep breath right now. Anne-Marie, appreciate it. Joining us here in Davos, Switzerland, Dave Mackay, CEO of RBC. Dave, it's good to see you.
It's great to see you here in Davos.
We can talk about Squid Games a little bit later. Let's start with this spat. I don't understand this spat. Let me be perfectly honest. I remember when you joined us a number of months ago, 34 states in the United States run a surplus with Canada. If you strip out energy, the United States runs a surplus with Canada, except America needs the energy from Canada because of the way the refiners are set up. So can you help explain to me what this tension is all about?
Yeah, no, certainly there is tension, but you go back and look at the long-term relationship we've had with the United States. To your point, the supply chain integration, the energy integration. The U.S. imports 6 billion barrels a year, 6 million barrels a year. 60% of that comes from Canada. To your point, gets upgraded in the Midwest. That's significant profit. You can buy it at a 20% discount, upgrade it, make $10–20 billion of profit. So very strong alliance there. Therefore, there's a lot of signaling going on, I think, in the communication, signaling the importance of energy, signaling the importance of defense and borders, signaling the importance of the Arctic. So, within that messaging is a very strong communication that there's more we can do together. There's more energy we can produce, particularly LNG. Asia needs LNG. America's partners in Asia need LNG. We have multiple pipelines that we can export to Asia. We've been able to build those pipelines and export LNG. We can build a stronger alliance with America by leveraging our resources, not just fossil fuels, but rare earth minerals. I mean, germanium, gallium, helium. I thought germanium was a flower maybe a year ago. Germanium is a critical mineral now.
A couple of reverse lives. Carry on.
When you think about the production of germanium necessary in fighter jets and military equipment, China was a supplier before, so there's opportunities to build deeper supply chain integration on rare earth minerals. 70% of our potash goes to American farmers.
Yeah.
And therefore, food security and food defense. You look at uranium needed for nuclear power to drive all of those, all that power needs from an AI strategy. 30% of uranium into the United States comes from Canada. So when you look at the opportunity to develop and export, it's completely in sync with the president's strategy.
Do you think Canada has failed to communicate that message over the last several years?
We failed to develop our resources in an expedited manner. And therefore, the message is very strong to Canada. You have these assets. They're an important part of the overall relationship. You need to change your policy. You need to change your communication. You need to get the projects done. You need to get the mines developed and into the marketplace. It's absolutely required for national security issues, for future energy issues, and that's our challenge. And we accept that challenge, and we can do this, but we've got to get going on it.
One of the obstacles, though, and this has been an obstacle for a lot of places, is leadership. And we've seen the sort of collapse of the government and the sort of question around who's going to take the helm and negotiate with Donald Trump. And there's what you want to see happen, and then there's just dealing with the reality that you face now. How much, as a bank executive, are you saying, I'm just going to expand more into the U.S. because that's where the dynamism is, and hey, it can protect me?
Yeah, you're so right. So, capital flows where there's certainty, and where there's opportunity, you can earn a return. And when there's uncertainty about the rules and regulations, it's harder to invest capital. I would say, and you're seeing this in the American exceptionalism, tone at the top matters. It matters at the top of a corporation. Tone at the top matters on national issues. When you see, you call it animal spirits in economic terms, when you have a messaging from the top in the United States around pro-business, getting things done, removing red tape, leveraging talent, that causes investment, that belief in the future opportunity. And whoever leads Canada, and we'll go through a democratic process, tone at the top, whoever gets leaded, is something I think we're missing again.
Well, in the United States, as a bank executive, as you expand in the U.S., how much is the focus on something you know very well based on the Canadian economy, which is oil and gas? At the time when you've got drill, baby, drill, and an increasing amount of energy needs with artificial intelligence, have you been focusing in particular on that area to really expand more broadly in the United States?
Yes, certainly as we look at our markets-based business and capital markets, we've had a significant opportunity to serve clients. We're a leading energy bank, but we also focus on balancing the overall emissions in that portfolio as we've committed to an overall journey towards net zero in 2050. How we get there as a society, we're being challenged on all fronts to maintain prosperity, to maintain growth and equality. And we have to make some tough decisions as a society, how we're going to balance all of those and maintain our competitiveness. And we're carrying significant amounts of debt, government debt, corporate debt. And you hear the themes here at Davos. What are politicians and businesses talking about when you have these high debt loads? They're talking about growth. Growth and competitiveness is the theme. And therefore, if you want to grow and be competitive, you have to think about your rules, your regulations, attracting capital into your marketplace. 40% of global capital flow went into the United States last year. To your example, to your question. Therefore, that tone, the ability to be successful, the rules, all that has really driven strong growth in the United States. And you're seeing European leaders mimic that. We got to see that mimicked in Canada as well.
Speaking of growth, AI and the growth of infrastructure around AI, big push overnight from the US administration. Could you potentially describe the opportunity that's available to the Canadians to explore doing something similar to what's happening in America?
Yeah, it's a great question. For AI, you need data and platforms, but you also need power. You need clean power. You need cost of power is really important. If you look at the differentiation, the struggles of some of the countries around building secure power, it's the cost of power has made them uncompetitive. You look at Germany. So what Canada has to offer, to your question, when you have such large power needs to store that data and to process that data, you need a colder climate to keep the servers cool. You need abundant and cheap electricity. And therefore, when you look at Canada's ability from not only hydroelectric, but from gas-powered energy, and then in the future, more nuclear energy, it's a great place to put your data. It's better to move the bits and bytes than it is to move the natural gas and pipelines, and therefore a huge opportunity for Canada to provide cheap, green energy to power those data centers. So we want to be part of that, and we're pitching that, and you're seeing a lot of interest in Canada from U.S. platforms in data centers. So it's a great question.
I feel this tension between increasing energy abilities, energy production, and reducing emissions, having sort of some kind of clean goal. And it's really been a vibe shift that we've seen pretty dramatically. RBC is now the only large Canadian bank that has not exited the Net Zero Banking Alliance. Are you expecting that to change?
Yeah, so as I've communicated before, we have a process that we're going through to evaluate that. I think the NZBA served a purpose early on in its incarnation to get banks together to talk about their journey, created a scenario that's becoming increasingly improbable in the world of a 1.5 degree, and therefore as we think about how we take this journey, so is it served a purpose going forward? I'm not sure the NZBA, as the Canadian and the US banks are signaling, kind of served its purpose already. Stay tuned. We're going through kind of an overall review process, and we'll make that announcement in due course.
Just to find a few questions. Have you spoken to the Conservative leader, Poilievre?
I have, yes. Yeah.
What's he like? What are you hearing?
No, he's got a lot of experience in our country. He, has a hunger to lead the country, obviously, as he's expressed that, and he will go through an election process likely this year to convince Canadians that he is the right person to lead us. And I just come back to my original message, tone at the top, so important. You've seen that in the US, you're seeing a change in the tone at the top in Europe. Pro-business, pro-growth, less regulation, we got to get things done. So whoever leads Canada, whether it's he or someone else, we just need that leadership.
Dave, it's good to see you. As always, great to catch up. We'll see you back in New York soon, no doubt.
Absolutely.
Thank you, sir. Dave Mackay there, the RBC CEO. With an update on stories elsewhere this morning, let's cross over to New York and catch up with Danny Berger for your Bloomberg Brief. Hey, Danny.
Hey, John. President Trump says that he is open to Oracle chairman Larry Ellison or Elon Musk purchasing TikTok as part of a joint venture with the U.S. government. Trump signed an executive order on his first day in office, extending TikTok's sale deadline by 75 days. Billionaire Frank McCourt and Shark Tank investor investor Kevin O'Leary made a formal offer to buy TikTok earlier this month. Shares of United are rising in the pre-market more than 3.5%. United reported fourth quarter earnings that beat estimates and projected first quarter profit well ahead of Wall Street expectations. The airline attributed the strong outlook to an unusually high demand for premium and international travel. Meta is working on upgrades to its smart glasses and exploring new wearable devices like watches and camera-equipped earbuds. People familiar say that Meta is working with Oakley to create smart glasses for athletes this year. Meta aims to release its first true augmented reality product around 2027. And that's your brief, John.
Danny, thank you. Flew over here with United, so let's talk about United. Okay, just briefly. Everyone seems to have global services and Premier 1K. So I'm standing there and they're like, can we have global services? That's like their concierge key, their top.
Yeah.
Tier, half the plane goes on. Then it's Premier 1K, it's like the other quarter of the plane goes on.
So what did Mohammed have to pay you in order to go on United?
To go on United?
Yeah, exactly.
I've got thoughts. I'm not sure if I should share them. I shared them with Mohammed.
I'm sure you did.
I'll tell you.
I'm sure you did.
I've got some thoughts, all right. No one wants them. Up next on the program, US exceptionalism.
U.S. is at the epicenter of all discussions. It's risk on. Folks want to go. There's a ton of liquidity out there. There's a lot of pent-up excitement. So let's kind of, wait and see.
European countries need to think, do you want to compete as a small country or do you want to compete as Europe? I don't think they have a choice because the US and China have already started the race. And Europe needs to follow. There isn't a European company in the top 20 largest firms in the world. That is a problem.
But what does it mean for individual countries within Europe?
You can have more control and less growth, or you can have less control and more growth. If countries trust each other more and they build more European champions rather than each country having its own national champion, growth is going to be better, productivity growth is going to be better, the welfare is going to be better. But there is going to be less control at the national level. So right now, each European country wants to have its own telecom company, its own couple of large banks,
Its own bank.
its own large energy companies. And the question is, are you willing to surrender some of this control to European firms, which are going to be more productive, but you are going to have less control at the national level?
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people,
the tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
the transactions,
Really a record-breaking moment.
Crypto VC is back.
and the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Equity futures up nicely this morning on the S&P 500, elevated by a few tenths of 1%. Outperformance by the Nasdaq. We're higher there by 0.8%. Bond yields have been lower over the past few days, stable around 460. Your 10-year yield at the moment, 457.44. And the surveillance this morning, it's US exceptionalism.
U.S. is at the epicenter of all discussions. It's risk on. Folks want to go. There's a ton of liquidity out there. There's a lot of pent-up excitement. So let's kind of, wait and see. You're seeing the biggest pools of liquidity all in the United States. So you had the building blocks of, even when we look at the valuation arbitrage, U.S. corporates versus even Europe and the rest of the world. I mean, there's a massive differential.
We've heard this from Citigroup right there. We heard it from JP Morgan a little bit earlier this morning, about 50 minutes ago. Lisa, you're hearing it across the board.
The question is how much the optimism is going to translate into deals getting done and then a pipeline building back up, and what that pipeline looks like, where it's getting financed at a time where the market looks very different today than 5 years ago.
Let's extend some of that conversation right now. Perfect guest for it, the NYSE president, Lynn Martin of the New York Stock Exchange. Lynn, good to see you.
Good to see you guys. Nice pad you guys
not
have
bad.
here.
It's not bad.
Like
I'm not paying the rent.
Yeah.
I'm not paying the rent, that's for sure. Everybody's so upbeat. Can we just start there? You met with the president very recently, opening bout at the New York Stock Exchange. What was that like? What did he say?
Well, it was amazing. I think it really put a fine point on his focus on highlighting the U.S. economy and the strength of the U.S. economy. Feels as though the pro-growth agenda is going to be something that's front and center, not just for him, but for his entire cabinet.
I can feel that in the confidence levels. Are you seeing it already in the activity levels? Do we have to wait for that?
No, we're seeing it in the activity levels. We're seeing the IPO market start to open up. Although last year wasn't a bad year, particularly if you look at the first half of the year. Got quite a few deals out. And then you had a bunch of volatility set in because of the election. You weren't quite sure what the outcome was going to be. So a variety of deals pushed. Those deals are now getting on the road. They're making plans to IPO either in the coming days and weeks or in quarters or second half of the year. But the activity is real.
How much are companies waiting for some certainty? I mean, we're getting buffeted around by different headlines of different potential policies and tariffs that may or may not come. And is it a negotiating tool? I mean, it seems like people are saying things that they don't really understand or believe because they don't really have any of the facts. How much are people waiting for some of that to shake out before completing a deal?
I think people are waiting to see some deals go, quite honestly, and to do well in this environment. If I look at our IPOs from last year, though, of all of the IPOs that list on the New York Stock Exchange last year, in aggregate, they were up 58% versus their IPO price. To me, that's the sign that the market's really open. So once you remove that uncertainty around the election, now's the time to go.
I was speaking with one bank executive who said the market's been open. This is a market that has been open, but there have been a lot of companies that don't like the price that they get when they go out there, especially if they've been hiding in the private markets and have been really elevated in terms of their valuations. Is there a growing disconnect about the need for going public at a time where companies can remain private and even be highly valued as private companies?
Liquidity, though. That's the one thing that you don't get in the private markets. Consistent, sustained, and deep liquidity. Nothing beats the liquidity of the public markets. I think the private markets, make no mistake, play an incredibly important role because not only do they fuel that next great idea when it's in its infancy, but it also is able to take a company to the point where it's public market ready. What you saw were companies rushing out 5 years ago, even in 2021, when we saw the height of IPOs, they rushed out to really take advantage of those valuations, and a lot of them weren't ready to be a public company. I think as a result of what we've seen over the last 3 years, you're going to see the companies that come to market be higher quality, know how to execute on strategy, profitability, capital returns, all of the fundamentals that make public companies successful.
When you say not public market ready, what do you mean specifically by that?
Clear strategy on where you're going with your business as opposed to throwing a bunch of spaghetti against a wall with a variety of ideas. By the way, that's super important when you're a company in its infancy because you're not sure which direction you're going to take.
Do you feel like your business structurally is challenged by what's been developing in private markets? And what do you think explains the decline that we've seen in publicly listed companies?
Well, we spend a lot of time really working in partnership with the private markets. Our job is to ensure that when a company goes public, it's ready, it's able to take advantage of the depth and breadth of liquidity in the U.S. markets. So we spent a lot of time on the educational side.
How much are you seeing foreign entities looking to list in the United States at a time where there's an increasing feeling that you have a leg up if you have a more physical presence in the United States?
Yeah, we've actually executed on a variety of transitions out of domestic markets, non-U.S. markets, over to the U.S., and those companies have seen a marked valuation appreciation.
There's one country that probably is absent in that, or at least will be going forward, or could be, which is China. And I wonder how much, we did see a lot of ADRs, a lot of receipts, depository receipts from Chinese companies in the United States. Do you expect that to fade, given the tensions?
You know, there have been some deals that have come to the U.S. market, but they're fewer and further between. I think as a result of economic policy and geopolitical policy between the two countries, it's still very early. Let's see how things progress in the next few months between the U.S. and China. There'll be additional clarity on that topic.
Are you confident that maybe there could be a resolution? Because the sitting president, Donald Trump, hasn't been as aggressive as some people thought he might be in his